foreigners have sold 40 billion in 18 months, but markets, large caps have been flat. So I think when you are raising 5 lakh crores of capital a year, another 50,000 crores more or less supply, which is what foreigners do, I don't think it moves the needle meaningfully for the Indian markets. But I would agree with you completely that this could be good for a sentimental rally.
So you're saying that even if the FIs come back, it's not going to be a meaningful driver in terms of big percentage gains for our market, pushing us up towards, say, a 10% rally over the next few months? It doesn't.
Nifty could rally if foreigners come back, because in Nifty there is hardly any supply of stock.
Okay.
And local funds in any case are buyers. But the moment you have good market sentiment, the supply of stock also catches up. So you were raising 5 lakh crores. If there is more money in the market, you may end up raising 6 lakh crores. So ultimately, markets will over time move depending on valuations and fundamentals. And I think the impact of flows is not that significant. Think of it this way. Why did the markets not go down when you had 40 billion worth of sales? So I am not trying to underplay the role of foreigners for near-term movements, but longer term, these markets are clearly driven by local capital, which is far bigger, and also the supply of stock, yes.
So what is your view now, Prashant, on the markets 12, 18 months down the line, considering that we've gone through a period of time-wise, a little price correction, we've underperformed versus peers, earnings are expected to pick up, say 13, 14% by FY27. What is the view on the markets and how are you constructing your portfolio, the advice?
I think we are constructive on the portfolio. Markets have time corrected for, Nifty has time corrected for almost 16, 18 months. India's premium over EMs has been reverted. Foreigners are underweight. There is hardly any supply in Nifty. And as you rightly said, earnings growth mainly led by banks pricing in lower deposits. Earnings growth outlook for fiscal 27 is mid-teens compared to single digit in this year. So I think we have said this on record also, that the next meaningful move in the market should be on the way up and not on the way down.
Got it. Prashant, just a quick word on sectors as we look ahead, right? Now, this is a big marquee thing. It's happened and thankfully it's come through early in the year. So where are your energies focused on? Is it which part of the market, in terms of finding those single stock opportunities, which could be wealth creators? Prashant, how do you think about it?
Prashant, I feel that large caps continue to offer better opportunities than small mid caps as a category. However, small mid caps have fallen quite sharply. So I think it is time for very, very selective buying into these names. On a 1 in 10, 1 in 20 names would start making sense. In large caps, I think sectorally, banks, insurance, automobiles, I would say even software, these sectors are looking good. I mean, I would be not constructive on consumer staples and retail, because these two sectors, I think, are expensive relative to their long-term growth prospects. And another point is, in these markets, the dispersion in valuations is pretty low, and there are hardly any deeply undervalued sectors. So this is not a market where you can make quick or big money, in my mind.
Prashant, you said the lack of AI trades in India worked against India. Do you think the budget announcements related to data centers, tax holidays addresses that? India can become an AI services hub? That anti-AI label, can that go away?
I don't think data centers are a proxy for AI. They are a very highly capital intensive, very low ROCE business. It's a good opportunity for India, and it is great what has been done. But I don't think it is a proxy for AI at all.
Yeah. Sorry, the IT.
No, on data centers, I asked that can it reverse the anti-AI label? That he says it's a good opportunity, but it's not AI, or as a proxy for AI.
Yeah.
But you said you like IT services, right, Prashant? Can you take us through the rationale behind it? Because when you look at earnings growth, while FY27 will be better than FY26, we're still looking at mid-single-digit kind of a top-line growth.
This sector has seen the maximum outflows if you look at the foreign selling last year. Why? Because many expect this sector to be adversely impacted or even disrupted by the adoption of AI. We have a slightly different view, and time will tell whether that view is right or wrong. We feel while adoption of AI will certainly improve productivity, but client spends are unlikely to come down. And therefore, these businesses may not get adversely impacted. On the other hand, as enterprises adopt AI, there is a fair chance that IT spends may actually accelerate. And these companies have proven to be very agile over the last 3.5 decades, and they have successfully navigated multiple shifts in technology. And we think this time should be no different as well.
Dark horse sector, right? In that sense, and it's underperformed for a few years. Sorry, you wanted to say something, Prashant?
I think yes, it's sold off very sharply. If you look at the dividend yields, probably it is the highest. Currency depreciation is in its favor, and despite the anticipated impact of AI, fiscal 27 looks to be a better year than fiscal 26. So let's see how it goes.
Well, Prashant, great conversation and a very reasoned view coming through from you. And thank you very much for joining us here on CNBC TV.
Thank you, Prashant.
Someone who's got one of the best track records with regards to investment management over a very long time period. We have Suyog Kotecha joining us, CEO and Executive Director of Ather Industries on the phone line. Suyog, great to have you with us here. Good morning. Thanks for joining us.
Good morning.
So for the chemicals industry and your business, give us a sense of US exposure and what does 18% now mean?
No, I think it's a great positive for the sector in general and also for Ather Industries. For a country, roughly US accounts for 20% of our chemical exports globally, and in that context, $6 billion worth of chemicals get exported to US from India every year. So in that context, this reduction from 50+% to 18% will help tremendously. Even for Ather, as part of our total revenue, 17 to 18% comes from US. So it's also sort of huge positive for us at Ather Industries. But I think more importantly, the certainty will help sort of decongest a lot of decision making that has got hampered in the last 9 months from investments point of view, from future growth opportunities point of view. So overall, a very welcome move and a huge positive for the sector and for the company.
What were you paying on the 17 to 18% as it was charged 50% till now?
Yeah, I mean, the tariff varied based on the product lines. As we explained before, some products were paying full tariff, some products we sort of exempted as part of an extra 2, and some products, the clients were able to reimburse the tariffs wherever.
So what was on average volume weighted, what was the average tariff, Suyog?
I think roughly on 40% of the volume we were paying full tariffs. And I think that's going to get mitigated quite significantly.
40% of the about 18% you were paying full tariff. Yeah.
And your competitors, I presume mostly it would come from China, and other countries. Can you tell us what kind of tariffs they are paying, and how would you be placed competitively now?
I think there are two major geographies against whom we compete, China and then Europe to some extent. I think with Europe we are at par, but given our cost competitive advantage, we should be able to compete quite favorably with them despite tariffs being, slightly favorable for them. China, now we will have a significant advantage, right? Because Chinese tariffs, if they continue to remain at existing level, then we will definitely have advantage over them as far as exports to US are concerned.
And China tariffs are 50% plus? What is the number?
in total, if you add up all different types of duties, they will reach closer to 50% odd level.
Okay. All right. Hi, Sayog. Good to see you in. So it's a positive coming in because you have managed to crack the father of tariffs. But what about the mother of all deals? You have some exposure to EU as well. And with the India-EU deal that was signed, are you a beneficiary?
We do have exposure to EU, though from a current business standpoint, it's low at around 5% odd level of our total revenue. But I think from a mid to long-term point of view, it's also a huge support, because a lot of long-term partnership opportunities, specifically for European chemical players who are rationalizing their own capacity in Europe, will now get attracted towards setting up that capacity in India. So from a near-term impact point of view, it may not be material, but from a mid to long-term point of view, I think EU FTA is also very positive. I mean, as we discussed, if you step back, right, as a sector, this sector has been, impacted on margin side for quite a while, almost now 2.5, 3 years.
Okay.
But in the last 3 to 4 weeks, with the 3 macro events, I think EU FTA and I think US trade deal recently, but in addition to that, some of the Chinese anti-involution strategy that has also got announced. I think all 3 are actually a big macro positives for the sector, and we hope this will finally start to lead to margin recovery in the sector, which was sort of long due.
Got it. So let's get the near-term trajectory then. Year to date, you've done roughly around 14-15% growth in terms of revenues, with margins in the vicinity of around 13.5 to around 14%. What do you end this year with? And on that sort of a base, what growth can you guide for? What about the margin performance from year on? And I think last quarter you did a Capex of around 300 crores. Earlier you were talking about 1,000 crores of Capex for the year, but you've upped that to around 1,100 crores. So run us through that detail.
Yeah, I think our midterm guidance is there out in the public, and we continue to stand by it. And in general, I think it's been a positive trajectory. All the actions that we outlined to achieve that guidance in terms of cost, operating leverages, and capex-led growth are in the play. Many of the actions around cost and operating leverages are actually already getting implemented. So I think we don't sort of deviate from that. I think from a capex standpoint, we are ballpark there. I think we said 1,000, now we're at around 1,100 crores because we saw some incremental opportunities in the market, especially in the energy and polymer segment, and hence we decided to do a debottlenecking, so very efficient capex to get incremental capacity out of existing assets. But the annual number is expected to remain around 1,100 crore range.
Okay. Just one final question: do any of your products come under Section 232, which still attracts higher tariffs?
We will have to go through that. As far as we currently know, right? Okay. But we wait to read the detail, sort of fine print, and then have a detailed evaluation. But currently, based on the information available to us, no.
So, Yog, great chatting with you. That's Ather Industries was one of the hardest hit stocks post the lack of the India tariff trade deal. And today, you are seeing a surge in the stock price. Stock is up 12% now. Yeah.
Before you go to Bajaj, we have the Bajaj management. PB Fintech, I just want to highlight very quickly. Let's just put the stock up. We reported yesterday, and that was an exclusive, that they are going to announce a fundraise. The PB stock, yeah, there you go. They're going to announce a fundraise. And the announcement came later for an acquisition, for perhaps an international acquisition. The stock sold off 5% yesterday, post the story, and is down another 3% this morning. That's a very large correction, especially, with the positive backdrop we've had. We'll try and get Yash with us as we go along for more clarity, for more details, etc. on this important story. But Rima, take it away.
So Bajaj Auto came out with their Q3 numbers. It turned out to be a good quarter. The company's revenues went up by nearly 19%. EBITDA margins at 20.8% versus 20.2%, and profits were up nearly 19%. We have with us Rakesh Sharma, Executive Director at Bajaj Auto, joining in. Rakesh, normally we would have started by asking you about, exports and, margins, etc. But this time, give us your overarching view on the India-US trade deal. I know predominantly you cater more to Latin America, Africa, so your exports to North America are fairly limited. But how does it change the industry? And it's under Section 232. Broadly, what have you picked up?
Well, it's certainly welcome news. Quantitatively, for Bajaj Auto, exports to the US, which we do under the Triumph and KTM brands, accounts for about a percentage of our total exports. So even when the tariffs went up, we were at an overall basis not really impacted by it. So now when the tariffs are down, the same sort of holds true. However, having said that, as we sort of build up our business with KTM Austria and through them accessing markets like US, we do foresee more and more production to shift into India, and therefore we will be making more US relevant products in the future. And I think having these tariffs will be certainly very helpful from that point of view. And beyond that, I think the signal which goes out from a sentiment point of view, with US and India aligning, there are so many other things, we trade in US dollars there, and so it's good to have this positive sentiment all around. It's good for trade.
And exports on the whole, monthly are crossing the 2 lakh mark. So this quarter, it's been in excess of 6 lakh. And you've also said that the company expects exports to deliver highest ever top line performance in dollar terms in FY26. How do you see the export momentum, particularly for Q4? Does the 2 lakh momentum get stronger per month? And for FY27, do you have a number in mind?
Well, I think Q4 will sustain at the levels which we have been doing. We've been growing at about 15 to 18%. Q4 tends to be a bit shorter because we tend to complete our exports by 20th of March or so. So you have, in that respect, less number of days. But the tempo should be maintained, and we are hoping to, on the average, still clock over 200,000 units per month as an average in Q4. Going beyond that, we are going to be responding to the market quarter by quarter by quarter. At this point of time, as things are now, it looks as if we will be sort of trying to inch up above this number in FY27. But international business is got these, several moving parts, macroeconomics, geopolitics, etc. So it's very difficult to crystal ball gaze. But at this point of time, we would be looking forward to maintaining this kind of a tempo even in FY27.
Okay, so at least for Q4 near term, that 200,000 plus monthly sales should continue for export. What about margins? If you could talk about the commodity inflation that you have seen in Q3, expectations for Q4, and even in terms of offsetting measures via price hikes.
So the margin story is not a very difficult one at this point of time. Yes, there have been increases on the noble metals package, quite substantial increases, but they have been offset by flattish performance of steel and rubber and some natural products. So on the balance from the commodity side, there has been a little bit of an inflation, which we have taken actions on early Jan to plow those back. Now, as we move forward, that the softness in the Indian rupee has been very, very helpful. And with the rupee trading at 90 plus to the dollar, that is a very significant tailwind. So we're not under any kind of great pressure to manage the margin story given these things. So we will be, but always looking at competition and the impact on demand, etc., and responding to those factors rather than the cost side factors.
So baseline margins of 20% plus should sustain.
Hopefully.
And the EV markets you have pulled back good amount of market share, close to 500 basis points. Do you believe you can go even higher from here? And your earlier competitor, Ola, is struggling out there. Have you had a look at their business?
All the time. So
with keen interest, I meant.
Because that we had major supply chain dislocation, both in two-wheelers and three-wheelers, and therefore, quarter three clawing back 5 percentage points of market share and getting back to a firm number 2 after having slipped down the league table is very, very welcome. And almost in the closing period of quarter 3, we also launched our a new edition, which sort of opens up a new segment for the Chetak scooter, nimble, agile Chetak C25, targeted specifically to the youth and women, and that should open up. So the Chetak portfolio has got bolstered, and we will therefore obviously be looking forward to improving our market share in Q4. Electric three-wheelers, also we had slipped down, but there the return has been quite rapid, and we are for the last 2 months now at the number one position. I think January we've exited at about 38% market share in the e-auto segment.
Okay, all right. Thank you very much, and always appreciate your time here on CNBC TV 18, sir. And good luck as you continue to execute. I just want to quickly make a mention of what markets are doing before we go any further. 640 odd points higher right now. Look at that. I mean, it's a green-looking screen across the board. Sensex up 2,000 points. You got the Nifty Bank, which is up 1,350 points. That's 2.33%. Mid-cap index is up about 3%. 1,640 points, beautiful and healthy and all of that stuff, right? And after a long time, because we've been kind of sort of struggling and the mood's been a little off and down. Hopefully, this is durable over the next many trading sessions. Rupee, of course, is now the dollar rupee. That is. Will also come up on your screen. It's saying it opened up 1%. The dollar rupee opened 1% lower. Rupee was up 1%, and there you go on your screen, 1.25%. So under 90 now, and perhaps even beyond that. We'll see. That's the rate this morning. 90.34 for now is where we stand. Should we take a break and come back? Yeah, let's take a quick commercial break. PG Electroplast Management will be with us on the other side.
More earnings reactions. The next one is PG Electroplast. Well, the first half of the year was quite a washout for PG Electroplast. The company's revenues in the first 6 months of this fiscal year went up by 8%. But in Q3, the company has come back very strongly. Q3 revenues have gone up by 45-46%, with the room air conditioning business making a comeback with an 80% top-line growth. It appears to be a lot of channel filling ahead of the January 2026 energy rating change. Vikas Gupta, Managing Director of PG Electroplast, is now joining us on the show. Thank you very much for joining in. So the star this time was the room air conditioning business, but I understand that was an account of the energy changes which come in, and there was a channel filling. So going forward in Q4 or first half of FY27, which is also sort of the peak market for you, what kind of growth should we expect for the RAC business?
Good morning, Rima. Definitely, I would look at like Q3, particularly was marked by the channel filling that has to be done, and the brands were picking up a lot of inventory because of the price increase in the models of different air conditioners based on the rating energy table change. So now that led to the good growth of AC sales in our Q3 numbers, and December was one of the best sales months for us for air conditioners. So we feel going forward in the Q4 of FY26, we are seeing that the inventory is still there in the channel, and that inventory still needs to be picked up. And we are just hoping that the summer onset should start in southern India in next 2 or 3 weeks. We are doing our own channel checks, and still the market has not opened up. So we remain confident that the market should open up, and we should be able to meet the sales guidance that we have given for our company. And we remain optimistic based on the guidance and based on the order book that we have with us from our clients.
Hi, Mr. Gupta. Good to see you. Is there a possibility that you can outbeat this guidance, though? 17 to 19% revenue growth and the PAT number of around 300 crores for FY26?
Good morning, Nigel. So I would like to stick to the revenue guidance that we are given of 5,800 crores. That I will not like to touch upon right now. Because we need to see how the next 3 to 4 weeks will look out.
Got it.
January month was a little tough because there was a lot of inventory which was already picked up in the month of December. So we are hopeful that the going period of next 6 to 8 weeks should be better for us.
And PAT will be around 300 crores by the end of this year. Is that correct?
Yes, sir. Yes, sir.
All right. What's the update on the compressor JV, sir? We've been talking about that in the past. But what is the latest?
So, Nigel, I would say the compressor thing is still moving, and we are hopeful that we should be able to close in next, I would say, 3 to 4 weeks. We are hopeful, and it is still work in progress. There is a positive movement on that, and let us hope that we should be able to close it in next 3 to 4 weeks.
Okay, just give us a sense about inventory, because you mentioned that a couple of times that inventory is still high in the system. So, could you tell us what is the norm, and in number of days, what is it currently?
So inventory, we need to look at two different levels. One is the inventory at our company level, and the inventory in the channel with the trade partners. So when we look at the inventory at our level, the normalized level of inventory in the peak season should not be more than 30 to 40 days.
Okay.
And still we are sitting at almost around 45 to 50 days inventory, which we are expecting that should get normalized in month of February and March. Regarding the channel inventory, yes, there has been a lot of push of the inventory by all the brands to their channel partners before the change of the energy table. So there is a inventory sitting in the channel, and we are just hoping that it gets cleared with the secondary sales picking up in the coming 2-3 weeks.
Vikas, good morning and good to see you again. So stocks up 7%. Just a quick word on commodity price inflation, right? How is that? How are because room ACs, etc. Copper is a big one. Is this going to? We've seen this in previous cycles. You know, it doesn't hurt, and then it suddenly starts to gross margins, etc. start to come under pressure. Your thoughts?
So Prashant, definitely the commodity prices are playing a lot of pressure on the bill of material cost, and we are in active discussion with all our clients for the price increases. In some cases, we have been able to achieve the price increase. In some cases, still under discussion. Definitely, there is always a lag. Whenever there is a price increase coming in, there is a lag, and we are in discussion. So it might put some pressure on the EBITDA margin, for which we have already guided. If you look at the EBITDA guidance that we've given for FY26 is slightly lower than the EBITDA that we were able to achieve in FY25. So we are hopeful that we should be able to get the price increase done with most of the clients.
And these usually happen annually, or it's there?
So the prices that we settle with our clients are mostly on the monthly and the quarterly basis.
Okay.
We are able to revise basis on some.
But it's a tough market to get price increases, right? Cost of ACs is already higher because of those energy ratings. So there is that affordability issue, and now this. So it's a tough kind of a space.
So definitely, the competitive intensity is also improved and increased, and getting a price increase in such kind of environment is always tough.
What was the impact of commodity inflation on your margins? Q3 margins were 8.3%. 9 months were at, I think, close to 7.5%.
So, Reema, as I told, if you look at the previous 9 months, the hit on the margin was because of the other issues like the inventory carrying cost. It is not largely because of the commodity. The commodity prices have started moving up in the last 3-4 months only. So that impact is still about to come in there. But we are hopeful that we should be able to get the price increase from the clients.
So how many of your clients, what percentage of your clients have accepted a price increase already? What is the extent of price increase?
So the price increase almost is the whatever is the commodity increase is always kind of a pass through to all our clients. And I would say in the case of 60 to 70% of the clients, we have already been able to get the price increase.
Yeah. Vikas, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here and good insights on what's happening with your company and, of course, the industry as well. We wish you all the best. Well, Nigel has walked across to the wall and we want to talk about stocks, right? Textiles is what we're going to start with. Nigel, take it away.
Well, that's right, Prashant. Just take a look at this. You know, you have the Nifty, you have the Sensex, you have the Nifty Bank. All of them are dancing away in today's trading session. Also pull up the mid-cap index. That's doing very, very well. And by the way, this is the key number that you'll be tracking today. It's been a while since we saw 2,500 stocks that are advancing and the number of stocks declining only around 275. So within that ratio of around 10:1, it's been a long, long while since we saw something like this. But the sector clearly, as you said, is this textile space. So Welspun Living, that's a stock that's up and about. You have Gokul Das, that's locked in the upper circuit. In fact, you can't, get some of these names because they are up 18 to around 20% or thereabouts. And pull up a few. Himmat Singar as well as another stock that is gaining in today's trading session. So all the textile pack actually is doing well, and Pearl Global, as we heard the management earlier, they said that this is a significant positive for them. So that's why that stock as well is doing well in today's trading session. Into count, the last time I checked, that stock was locked in upper circuit, and a lot of them, they're still locked in upper circuit, while some of them have come off the top. Besides that, other stocks that have some exposure to the United States. ADF Foods, that stock in fact is moving in today's trading session. So I think we should get ADF Foods up for you on the screen. Doing pretty well in trade today. Carousel is another stock, smaller name, but they have exposure to the United States. So that's why that name is doing well. And we have the management of Ather Industries. Well, they said as well, there'll be some relief that will be coming out there. And it helps them in terms of competitive intensity globally. So Ather Industries up more than 10% in today's trading session. So a lot of stocks doing pretty well. On the flip side, I think one of the big losers today is PP Fintech. Yash is exclusive yesterday. Well, that stock was ended lower in trade yesterday. And today, in fact, it's a little bit lower as well. Indian Hotels is another stock actually that was doing well. If I remember correctly, there was Goldman Sachs notes that had come in earlier today, and they're rather bullish, and that's why they initiated coverage on Indian Hotels. It's up close to around 2.5%, but from the recent low, that stock has gained close to around 10%. Net, beautiful trading session. Take a look at the screen. It's been a while since we saw the screen like this, and this number, 2,500 stocks advancing. That's what's making your portfolio feel very, very good. Back to you guys.
All right, Nigel, thanks very much for that. So yeah, I mean, it is looking, it's a good looking big grand screen and it's a big grand open for now. Mihir Vora is with us, Chief Investment Officer at Trust Mutual Fund. And we also have Rahul Bajoria, Head of India and Asian Economic Research at Bank of America Global Research. Gentlemen, great to have both of you here. Thank you very much for joining us. Rahul, you're the first, I think, economist that we have on. And so let me start with you. I'll give you the first word. So it's a happy occasion. The deal's done. What does this do in terms of growth impulses, terms of sentiment? The stock market is a powerful indicator of it, and we are seeing what's happening there. But beyond that, on a durable basis, what does it do? And any nuance, any detail you'd still wait out for in that sense? Go on.
Sure. So I think first of all, this particular announcement obviously takes away the months of uncertainty that, both the RBI and the government have been kind of experiencing as far as the growth outlook is concerned. Now, obviously, the one question mark, I have is whether that kind of derails or at least slows down the pace of reforms that we have seen in the last few months. But my sense is that, it could, basically leave India into a situation where, now we have access to large markets globally, from a trade perspective. We obviously have had a fair amount of policy easing, both on monetary and fiscal side. And with the kind of commodity price backdrop we have, we should see a meaningful improvement in the growth outlook. One of the reasons why we did not upgrade our GDP numbers in yesterday's note was we are waiting for some specific details about what kind of import commitments have we made, what kind of sectors have we opened up. Obviously, the fine print matters, but I think it's safe to say that the sentiment improvement and that we see in asset prices this morning is going to be a pretty big fillip as far as the economy is concerned. And so from here on, we think that the momentum momentum on the economic side which already was looking pretty okay, to be fair. In the last, few months, we have seen the growth numbers, holding up. That probably gets a further boost from a sentiment standpoint, and that, my sense is, could easily push growth rates above 7% in the upcoming fiscal year as well.
Yeah, there's a growth impulse as well in that sense. That other point, any specific details still awaited? Have you heard anything? I mean, and people, of course, will hear, I'm sure, from the minister here in charge and others as well. But any specifics you're still waiting out for?
So one of the key questions is when, President Trump in his Truth Social post had mentioned that India is going to lower its duties to 0%. I think we would want to see whether this is a all-encompassing reduction or, are there carve-outs. But I think overall, when we look at the effective tariff rates on India, our back of the envelope calculations were from around 35%. It drops to around 12-13%, and, potentially even a bit lower given the changing mix of the exports, towards electronics, which is exempted. So I think net, you will see a meaningful improvement in the competitive landscape of Indian exports. So even if, there are, fine prints and specifics that we are missing, my sense is that the overarching message is that from relative to where we were, say, last week to where we are right now, there is a meaningful boost to competitiveness when you put both the EU deal and the US deal.
That's the export bit, but on the import bit, which you refer to fleetingly, you would expect there will be carve-outs, right? Obviously, I mean, things like agriculture and many other things, despite that post from President Trump.
So I would assume there would be certain carve-outs, but the absolute numbers, I think, have to hold. Right now, the question is, India already imports about $50 billion of goods from the US. So does that mean that we bump it up to $100 billion on a run rate basis, or is this $100 billion on average every year for the next 5 years? Over and above that, I think those are the specific details which are missing. But my sense is that it will be more of a substitution rather than an incremental increase. Remember, India's imports are also going to grow in the next 5 years, which in turn are going to basically place a fair amount of space for India's imports to rise. So I'm less worried about the specificity. I think we have to look at the positive headline impact here in the way policy is going to be framed. And so from that perspective, I think the first reaction is that this is going to be positive for growth. I think what we are basically debating is to what extent is it going to be positive.
So case for GDP upgrades out here in India. Thank you very much, Rahul, for joining in. Mihir Vora, Chief Investment Officer at Trust Mutual Fund, is also with us. Mihir, already 2.5% in the bag so far in the morning. Do you see with this announcement, markets can move up by, say, 10% in the next, by the end of this year, or maybe in the next 6 to 9 months? And what are the big ideas now? Have you been buying this morning?
Good morning. Thanks for calling me on a good day. Yes, it is a big event, and this is one of the key triggers that was holding the market back, and now we have got it. I remember in our weekend show we had discussed 10 days ago about this is the big trigger, so that's happened. And I think yes, 10% is absolutely possible for the markets in due course. May not happen overnight, but the fact is that we are catching up versus the rest of the world in a big way, and we have to, because as we know, as we have seen last year, India was amongst the worst performing markets globally, both in terms of absolute numbers and including the currency. So we have a lot of catching up to do in the currency. We have a lot of catching up to do in the equity markets, and with the underperformance, as we have discussed, the absolute and relative valuations of the market, whether it's in large caps, mid caps, or small caps, have become reasonable. So we're starting off with a low base, very pessimistic sentiment, currency weak. And now with this deal, I think a lot of the FDI, FPI flows, etc., which we are waiting on the sidelines because of this geopolitical uncertainty, will come in. I think the key trigger that we were waiting for is this deal, because it is the key to FDI flows and FII flows, which I think will start coming in a big way now.
Right. Hi, Mir. Good morning. Good to see you. And as they say, right, form is temporary, class is permanent. And hopefully it's our time to shine now after the underperformance we've seen in the last 12 to around 15 months. That said, Mir, what are the cash levels you're sitting on? And are you all deploying today? Have you all deployed some money in the last few days? Budget day as well. It seemed there was an over-exaggeration on the downside. And from there, we've seen a good 1,000-point move, actually. What's your allocation strategy as we speak?
So we're keeping normal levels of cash. We had a little higher level of cash, so we are deploying it over the last 2-3 days. And I think it's going to be more about stock picking, because while the markets are up 2.5%, you do see stocks which had been beaten down, and sectors which had been beaten down on the back of tariffs. They are starting to rebound, and those will create a lot more alpha than the broader market. So it's time to go back to sector and stock picking, and that's what we are trying to do now. The key is that the currency, I think in my view, has been a big factor. And if you see today, the rupee is appreciated to almost 1.2 rupees versus the dollar, and that's going to be the trigger where people now see the geopolitical risk and the currency risk out of the picture. And then if you adjust for that, then the absolute returns in India look very good. So I think we will keep deploying the money over the next few days.
Yeah. 100%. Mihir, a shorter conversation, but punchy and useful to get that quick input from you about where we are at now after this big deal. Congratulations, I can say, as you manage your portfolio, and it'll all be looking good, looking better, much better as compared to where we were yesterday and day before yesterday. Those are visuals coming through right now, and Prime Minister Modi, you can see his top ministers alongside him. You got Mr. Amit Shah, you got and others. Rajnath Singh is there, yes, and there are others. But I think this is an NDA meeting, right? Where Prime Minister is. Yeah, this is an NDA parliamentary party meeting, and we'll have to see if there is a comment or two which comes in from the Prime Minister with regards to the trade deal. And I know we most definitely will hear something at some point. I'm not sure this will be now, but those are visuals and general sense of enthusiasm, of course, with what's happened last night. And I think it's kind of sort of, anyone is untouched by it. Those in the market, those outside of the market. I think this is good news for the country in terms of settling this very thorny kind of relationship we've had, this path we've been on for the last year plus or so. Yeah, so that's that. We are getting you reaction after reaction. Markets, we got that economist reaction. We'll get you more corporate reactions as well as we go along, but markets leveling off a little bit now. 630 odd points is where we are at this stage. Well, I just want to play out a quick soundbite. Our colleague Chandra from Money Control got a reaction out of President Donald Trump. This was, of course, in Davos. I just want to play that out. President Trump, of course, saying that calling Prime Minister Modi a close friend and expressing confidence of a good deal soon, which is now materialized.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine. We're going to have a good deal.
It was a global exclusive, our colleague Chandra from Money Control from on that soundbite. Well, we got Baba Kalyani, Chairman and Managing Director of Bharat Forge, now with us. Mr. Kalyani, good morning. Great to have you with us here. Thanks very much for joining us. It's a good day. And I think the sentiment, of course, is upbeat. It's reflected through stock markets, rupee, etc., etc. But as an industry leader running a variety of businesses, what's your perspective on this? Before we get down to implications for Bharat Forge and specific businesses.
Well, as far as industry is concerned, you can't get up any day morning for this kind of news that we've been waiting for such a long time. It's been a very, very positive development, and I'm very happy that we have got everything done as far as India-US trade deal is concerned. It's not just about trade; it's also about relationship. It's also about the future, and I think this fosters very good doings for India. I think congratulations to our Prime Minister, our Commerce Minister for making this happen.
Mr. Kalyani, morning, and thank you for joining us on this historic day. But just to get to the nitty-gritties, for Bharat Forge, what percentage of your sales come from North America or US in particular? And what percentage of your product portfolio will now attract 18%? And how much will come under Section 232, the national security tariffs, where the tariffs will be higher? Do you have any clarity?
Well, we don't have any clarity. Largely, the products that were going for passenger cars were on with Section 232. But I believe from whatever I've heard from this morning from the US and late last night, that Section 232 also is under discussion between India and the US to bring it all to a levelized tariff of 18%.
Have you had any Okay. So what percentage will come under 18%? Sorry, I didn't get that number.
For us, we believe almost everything will come under 18%.
Okay.
And if we look at our exports traditionally used to be in the region of about 500 to 550 million on a revenue of roughly about 1 billion. So 50% of our exports were to North America. 50% of our revenue came from North America. Now our revenues are much higher than 1 billion. So we are expecting our exports to almost go to a level of close to 1 billion. Not all will be from North America, but roughly about $700-800 million will be from North America in the coming year.
Have you had any conversations, sir, with your customers regarding the cut in the tariffs?
Yeah, we have had some conversations. Actually, it's too early to have conversations with customers, but I want to say one thing, we've been discussing with our customers for almost the last 1 year, and I must say that all our customers in North America have been immensely supportive. We are very grateful to them for working with Bharat Forge and believing in us and believing in India to continue their path for long-term global strategic engagement. So I think, this whole idea about resilience in the supply chain has worked out and it's been great, and I think the future will be even greater.
All right. Hi, Mr. Kalyani. Good morning and good to see you in. You're saying that, that ambitious target with regard to the exports and exposure to North America, you want to put a timeline to it?
Well, this is the timeline for 26-27, this coming year from April.
Got it. All right. What about, sir, how's demand on ground? We're getting mixed trends that we're hearing about. So given that now we have this out of the way, is demand good enough?
Demand was a little slow for the last 6-8 months because the commercial vehicle, the heavy-duty trucks, demand itself had gone down by 50%. But all indications are that the coming quarter, we will see almost about a 20-25% rise in our exports compared to the last quarter, and then another 20-25% rise in the quarter after that. So in 2 quarters, I would say the demand will come back to what was originally anticipated as 100%.
Mr. Kalyani, just very briefly, you said US exports will rise to $1 billion and
to 800 million.
To $800 million this year. That is FY 26 or 27?
No. Our total exports will rise to 800 million from a level of 400 million for this fiscal year.
Okay.
So it'll almost double.
Okay, that is FY 27. And of course, all of that.
FY 27, correct, yeah.
Okay. So on the defense side, right, we had a big allocation increase in the budget on Sunday. So any brief thoughts? What does it does for that business?
I think the defense business will also grow. I think largely it depends on how fast the decision-making process takes place. We have a lot of work in progress on many programs, many platforms. We are exporting roughly about $30 million a quarter in defense, roughly. And I think that will continue. So overall, the defense looks very good. We are also setting up our new facility in Andhra for making new products. So let's see. Right now we're in a silent period, so I can't give you too much forward-looking statements on this. Yeah.
It's a pleasure, Mr. Kalyani. Thank you very much for joining us and being with us on this. As you said, you don't get up every day to this kind of news flow. So this is certainly very, very good news. Thank you once again, and appreciate your time as always on CNBC TV 18. Take a quick commercial break here. We got about 600 points on the Nifty. Manisha Gupta will be with us to focus on commodities on the other side. Stay tuned.
Welcome back. Let's talk commodities. Manisha is now joining in. Manisha, for so many days, the movement, the action in commodities overshadowed equities. But I guess we can say not today. But what's happening in your world?
Oh, well, absolutely. Today, absolutely not today. But you know what is happening in commodities as well is after that very, very sharp declines that we've seen in last couple of sessions, we are looking at commodities coming back as well. So whether it is about precious metals, base metals, energy, all of that is trading in the positive. Not so for the crude oil prices. Well, yesterday was a more than 4% of a decline, which is the biggest decline in 6 months that we've seen come in for the crude oil prices. And after that decline as well, 66 is just about holding on the screen. So 4% of a decline in the overnight markets, but it is still trading 8% in positive for 2026 so far right now. Well, a couple of things to watch out for. One is that the US and Iran conversations have resumed. There are positive statements coming in from both sides, and there is an expectation that US and Iran could continue dialogue starting this Friday itself. The second is about the dollar index, where we have seen that one gain up to a 1-week highs. Not so good for many of these dollar denominated commodities, and is the reason the prices are in check. The third thing is about the OPEC meeting. Well, that is come and gone and nothing has been said. OPEC says that for the month of March, for this quarter, they are not going to be increasing production. Remember, in the last year, from April until December, OPEC did bring in nearly 2.9 million barrels per day back into the market, which is 3% of the global demand. Most importantly, though, is the US lowering tariffs on India from 50 to 18%. And of course, that has been done. One of the reasons there is, or one of the clauses there is, that India will stop buying the Russian oil. Well, India will have to buy more oil from US and even Venezuela for that matter. And the numbers do show that India has bought more from US and Venezuela for the month of January there. Take a look at the Russian share really. In FY20, it was 3% of India's imports. By FY25, we saw that number increase to almost 35%. Now, that really has been a concern. But when you look at the overall numbers as well, it has been going down in last few months. There is a report put forth by Reuters which says the highest that India imported from Russia stood at around 2 million barrels per day. That declined to an 11-month lows of around 1.3 million barrels per day in the month of December there. January is expected at 1.2 million barrels per day, and what has already been contracted will perhaps continue to come till the month of March. It could be 1 million barrels per day in the month of Feb, and by March is expected to decline to 0.8. But the thing also is that India oil purchase, Russia, of course, India buys nearly from 41 countries at this point in time, and the OPEC share of India is at 11-month highs right now. Now, markets do believe that as India shifts to other countries, the discounted oil benefit that India has had perhaps will go out, because the Russian oil was cheaper by $5, even $10 at some point in time. Now, India will have to buy at world prices with higher shipping costs, insurance, freight rates, etc., and that will take the prices on the higher side. There's a report from SBI which estimates that Russian oil imports going out and India coming into the markets now will mean that our bill for fuel imports is going to go up for the next fiscal.
All right. Thanks very much, Manisha, for that. Commodities there in focus. Nigel has walked across to the wall once again, and we are, of course, doing these market checks because, well, there is a lot of stuff worth checking out. Nigel, take it away.
Well, Prashant, we started off with a 1,200-point gain. The last time I checked, we were up only around 600 points. So I'm hoping that the Nifty actually can at least keep up with this pace. Hopefully, we go home with gains of close to 5 to around 600 points or thereabouts. The advancing number of stocks, though, that's still encouraging at around 2,500 stocks. Well, the big boy has come to the party. Reliance Industries, that's been doing a bit of the heavy lifting, and that one's holding up in trade. So when the big boy is up 4%, and I'll tell you what, it's taken off a couple of technical levels which were at around 1,420. And when Reliance Industries moves, the other one that derives a lot of its value from there is Geo Financial. So that one as well is up close to around 7%. Remember, on the way down, that got harder hit. Now it's rebounding in trade. But there are textile names, and I'm trying to get a few more textile names up for you on the screen. You have Capex that should come up for you. That's locked up close to around 20%. The other one is SP Apparel, a smaller name. So we have the larger names that are doing well, and now the smaller ones as well up and about. Some more stocks that have some exposure to the United States. Apart Industries, I recall Mr. Desai had spoken to us here on CNBC TV 18. In the last few quarters, though, there has been some slowdown. But however, in today's trading session, Apar Industries is one of the top gainers, up close to around 15% as we speak. Add to the list a Cosmo First that's come to the party. These are stocks that have seen a sharp correction from the top. Even a PCBL, I recall the promoter entity had infused money at around these levels. That stock is well moving higher on rather good volumes. The few more big movers that we're seeing in today's trading session, whether you're looking at Technocraft, Avanti Foods, you have CG Palm, as well as Sterlite Tech. So a lot of stocks are participating in trade. And BSE, what happened to the STT? Well, the stock now is higher than what it was on the day of the budget. It rallied yesterday, and today as well it put on some more weight. Add to the list, Grow. That's the other stock that's up and about in today's trading session. But we need to highlight a few losers as well, because this market has come off the top. So Misho is under some pressure. That stock, in fact, is losing in trade. You have Paradeep Phosphates. That's another stock that's lower in trade. Walchand Nagar continues to see some selling, and PB Fintech as well. But net, the number that you're celebrating is the Nifty. The Nifty is up close to around 2.5%. The Sensex holds with gains as well, and the advance ratio is something that you like. We haven't seen this in the while. Don't let it slip. Hopefully we go home with some solid gains by the time we wound up today. Back to you guys in the studio.
Thank you very much for that. Get into a break. On the other side, we'll connect with Shantanu Sen Gupta of Goldman Sachs and Chandresh Jain of BNP Paribas and continue our discussion on the India-US trade deal.
welcome to It's the Economy. The grammar for the Indian currency and bond markets has changed overnight, very sharply, after the announcement of the imminent signing of the US-India trade deal. Now, how do the macros change? How much more can the rupee rally? And how does this change the playing field for the RBI at its Friday policy? Joining me to discuss these are Shantanu Sengupta, Chief Economist at Goldman Sachs India, and Chandresh Jain, the FX strategist at BNP Paribas. Gentlemen, good morning. Thank you very much for your time. Shantanu, how does it change the macros? Are you going to up the growth forecast? Are you going to change your view of even bonds, as the amount of money moving out of India will probably decline?
Yeah, I think the clear positive is Indian growth, although the details are unclear at this stage. So what we know is a couple of Truth Social and X tweets, and the release from the PMO has come in only about half an hour back, but it doesn't really have details of how the deal is going to look like. But what is clear is that we are going towards 18% from overall aggregate 50% tariffs. So I think there's some clear upside to growth. We had not baked in the incremental or the additional tariff of 25% because of Russian oil purchases in 2026, because our view was that we'll get a deal done by Q1. But still, on the first 25%, the reciprocal tariff coming down to 18%, there is some upside to growth. On rates, I think this clearly means in our view that the RBI is done. I mean, in any case, our view was that the RBI doesn't cut from here on, but we had a risk case where the deal doesn't get done, and in that kind of a case, if growth, if there's a further downside to growth, the RBI could be moving maybe 25 basis points further. We would say now that that's out of contention, because the RBI, we think, now stays on hold. Will stay on neutral. They will try to do whatever is required in terms of providing liquidity, but no further rate action is what we would be making.
Would the need for liquidity also decline somewhat, Shantanu? After all, there was dollar deposits moving out. That it detracts from the deposit growth. So, is there some kind of more liquidity available?
Yeah, I think on balance, what you would find is that the requirement for incremental OMOs can come down if you have FX inflows or lesser outflows. So whichever way you cut it, if the net FX is positive for the economy, you will just have lesser requirement for either doing OMOs or doing buy-sell dollar swaps.
Okay.
But remember, we still have a close to $65 billion worth of short forwards, which in our view, the RBI will try to knock off and come to a more reasonable number, maybe around $30 billion or $40 billion odd. And therefore, we would expect them, that dollars to not necessarily hit the market, and we won't make a large amount of FX appreciation.
Okay.
But I think the pressure that you've had on the currency and on liquidity, as you pointed out, is going to be clearly lower if you have FII inflows.
Okay, well, that's clearly up Chandresh's street. Chandresh, what are you looking at in terms of rupee levels? One factor will be what Shantanu is saying, the FX swaps that are open for the RBI. And the other factor is that RBI anyway has been against volatility on both sides. So your range and your reasoning.
Sure. Thank you, Lata, for having me on the show. I think the new range now should be around 88 to 89. So we still see more appreciation on the INR now after the deal has done. Secondly, I think once we go to 88, 89 kind of levels, RBI might try to hold some of the dollars which will come to the Indian markets. They will try to increase their FX reserves and decrease their forward book where they are short. So I don't think it's a big rally which you should expect, but a little bit of more rally towards 88 is it's definitely possible from here on.
Okay. Now, when we were sitting on Friday last at 91, 99 and the RBI holding 92, we will take 88 with both hands. But Shantanu, will the Reserve Bank be so worried, or rather, won't it be worried if it goes to 88? Would it not rather keep it a little south, because there is an advantage if the currency is low but stable?
Yeah, our view is exactly what you pointed out, Lata. That we think that the RBI will refrain from an excessive appreciation in the currency, and they will try to either build reserves or knock off the forwards. Is what our view is. Because you remember the first part of the currency adjustment was the adjustment in the RER, which was quite expensive around the same time last year, and you've corrected now to about 95 odd. And our view is that the RBI would not like to let it appreciate meaningfully further, especially at the time when you would want to shore up your external balances. So our view would be that they will try to hold the line around 90 to 92 and not let it appreciate much further.
Okay. Well, today that seems to be the behavior, but of course I'm only picking up from dealer chatter. But Chandresh, did you hear of the Reserve Bank today buying dollars? And secondly, you're betting that FPIs will come. What has changed now is the sentiment. And maybe in a sense, the export flows because we expect them to resume what could have been, outcompeted. Is there a guarantee that FPIs will come? I mean, they can still find arguments like no AI stocks or expensive Indian valuations. Are you betting on the FPIs returning?
Okay, so two parts of your question. Yes. Firstly, I don't think the RBI is there in the market today. I think they still want to see more appreciation. And I say that with confidence because a couple of things are happening. One, with this, sentiment will change a lot. India's sentiment was very, very weak, especially from the foreign investors. They were worried about currency depreciation. They were worried about Indian equities getting sold off quite quickly. With this, I think both the things can benefit. Some flow will come back to Indian equities. And my sense is that with this, the growth number also look better, which means the earnings will also look better, which means foreign investors would like to have more Indian equities in their portfolio. And then the currency appreciates on the back of that. That's why I said 88 to 89.
Okay.
Secondly, if you observe, the oil prices have also dropped in last couple of days. Gold prices have dropped in last couple of days, which will also help the trade balance. And therefore, it aligns the perfect environment for INR to appreciate.
Okay.
And the last thing I would point is, typically March is one of the month when a lot of corporates repatriate their foreign income to onshore because of the fiscal year end in March. So that will also benefit INR.
Oh, absolutely. Many people were hoping to pencil in a BOP surplus for the Jan-March quarter for the reasons you are saying, but the January behavior has made people change their mind the way in which the rupee fell. Shantanu, what's your sense? Two macro questions for you. What are you betting on in terms of a BOP surplus this quarter and FY27? And secondly, how much does growth improve? After all, we tightened our belts, reduced costs, sought new markets when we were faced with the adversity. This could be payback time. So how much can you add to macro GDP growth numbers?
The growth one first. If you look at the tariffs getting reduced by about 7 percentage points, and I'm saying 7 percentage points because we had not baked in the incremental 25% additional tariffs from the Russian oil purchasers, that would mean anywhere in the region of 10 to 20 basis points directly from the net export channel. But the bigger sentiment change would be boosting, with a lag, of course, the private Capex cycle. I think the conversation about realignment of supply chains, investments back in India for those kind of realignments of the supply chains had sort of died down a little bit in the last 2 or 3 quarters. And now that you have the trade deal, I think some of those conversations will come back on the front foot. And, these capital commitments will possibly start coming in, albeit with a lag, possibly in the second half of the year. So you can have a little bit further growth upside from there. Again, we had estimated about 30 basis points drag just from investment uncertainty last year. So some of that will start getting reversed. So medium term, we think this is quite positive for growth. On the first part, which is the balance of payments, we'll have to look at the details of the trade deal to understand what exactly the impact on the current account is. There are some import channels which we will open up also possibly, right? Because you're bringing down your own tariffs or opening up your markets in some of these segments. The second is that if the oil markets are going to shift now a little bit, that Russian oil purchases from India is going to come down, and we are going to import from elsewhere. The net effect of that is also going to matter. So on the current account, we think about 10 to 20 basis points maybe in terms of upside, and on the growth also we would think anywhere between 10 to 25 or 30 basis points of upside, depending on at what point of time you bake in the upside from the investment channels.
Okay, fair point. This calls for a longer discussion, but out of time. We have a string of guests and analysts lined up. Thank you very much, Shantanu and Chandresh, for throwing more light on how we should look at the macros. 25 to 30 basis points higher GDP when we are standing at some 6.7 average on the street for FY27. The chief economic advisor is saying 6.8 to 7.2. Now I think people will move to the higher level of that band in terms of GDP. That's good news. We wrap up on that positive note. Chartbusters coming.
India and the United States seal a historic trade deal which sees a tariff on Indian goods cut to 18% from earlier 50%. The Nifty opens with a record gap up of over 1,200 points, currently holding with a gain of 725 points. The broader market gains in line with key indices. It's green all over the screen.
Sectors that take the spotlight. First up, textiles. Once the worst hit sector with a 50 to 70% revenue exposure to the United States is now flying high. Gokuldas, KPR Mills, Welspun Living all surge as India with 18% tariff is now better placed in comparison to exporters like Bangladesh and Vietnam.
The reduced 18% levy is expected to help auto ancillaries sustain global order inflows and margins as well. Bharat Forge's Baba Kalyani tells CNBC TV18 that demand could rise 25% as soon as next quarter.
Fears of volume and margin pressure set to wane for shrimp exporters. The United States is India's most critical shrimp market, forming 48% of India's shrimp export value in FY25. Shares of Avanti Feeds, Apex Frozen Foods extend gains in trade today.
Chemical stocks, other big beneficiaries of the India-US historic trade deal, SRF, Navin Fluorine, Vinity Organics, all of them have significant exposure to the US, everyone up between 5 to 7%.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and as you can see, the screen is green. You have a lot of stocks that are flying around. The Nifty is holding with gains of around 700 points. There was a bit of an intraday dip. We started off 1,200 points higher. We came down to around 550 point gain, but now we're back up with a 720 point gain. Hopefully, Mangalam, we end somewhere in this vicinity. You would like to go in with some big gains today, but the screen is green. It's been a long time since we got a chance to say that.
It's been a long time indeed, Nigel. And who would have thought that on a Sunday where the market was sub 25,000, sub 25,600, 24,600 as well, from the budget day lows, we've seen a near 1,300, 1,400 point rally, and it's just been a Tuesday.
Yeah.
As they say, right? There are some months where nothing happens, and then there are some weeks where months happen, and that's exactly what has happened. And we're not only done with all the triggers for this week. On Friday, we have the RBI policy coming in as well. So all of this just compressed into one short month, one short week.
Well, that's right, Mangalam. It feels like we are playing that long test and we need to dig deep because we need to pull through another 3 days. So let's get straight to a couple of managements.
All right, let's get straight to a couple of managements, and both of them are likely beneficiaries of the India-US trade deal. To what extent and what could the near-term impact be? We do have Chanchal S. Rajura, who's the Director of Finance at Transformers and Rectifiers. We have Rakesh Tiwari, who's the Group CFO, Raymond, joining in as well. Chanchal, coming to you first, if you could give us a sense on what proportion of your overall exposure is to the US, how much of that is to the EU, and at the same time, if you could also give us a sense on whether it will be easier for you to go there now because of the tariff, or there are some other competitive factors as well. Because on the one hand, it's fair to say, okay, the numerically 50% has come down to 18%. But in practicality, to be able to entrench yourself in these markets and compete against others is a difficult thing as well. So start with you, Chanchal.
Morning, Mangalam. Morning, Nigel. Actually, I must say that in 26 we celebrate our Republic Day, and it looks like we are celebrating our Republic Week. First, a good deal with the EU, then a very good long vision budget, and now this US deal. So things are going very good for the country. As far as coming to the industry of us, let me tell you that it's quite a very, very good news for us, because we have been looking to this particular thing since long, because the markets are in these particular territories are opening up for the companies like us in good numbers, particularly in the coming years, which is coming up. If you talk about US, at the moment we were holding around 150 million plus inquiries with the US, and we were just going slow because of this uncertainty which is going on, and now we will go full flow basis to close them very, very quickly. And apart from that, for particularly for the company like me, this is not only an opportunity to sell the transformer to US, but also the backward integration components which we are doing is going to be a great thing for us.
Right.
Because US doesn't have these products available there, and so as EU doesn't have.
Right.
And with the
Mr. Rajora, clearly, we're getting the point. You're saying that this is a big positive for the country as well as for your company. So great, good on that. Give us a few details. Exports is how much as a percentage of your revenue mix? Around 13%?
Export is around 13%, and out of that, around 25% goes to these two places.
All right, to United States as well as EU.
So net exposure is just about 5%, 5-6% maximum.
No, 25% of our total exports basically is going to these two places.
Correct, so 4%.
We were holding it because of the uncertainties what's going on, and you will see a significant growth now in these two particular things.
Can you give us an absolute number, sir? United States would be how much of your mix? Around 150 crores?
Yes, that's right.
150 crores, and at the EU
right now, Nigel, I tell you, is about we have around 1,200 crore rupees of inquiries at very high levels going with only United States.
So, Mr. Rajora, what you're telling us is that this number from around 150 crores in the next 3 years or so, do you see it go to around 500 crores or even more than that?
Present inquiry level is that much. It's on a very advanced.
So, in terms of revenues, it could potentially go up 3-4 times from here as well, the exposure to the United States?
Yeah, definitely. You see that, please understand one thing, in United States, right? The United States from next year is coming up with a replacement market of the power transformers. And India is the natural ally for that, because they don't have the capacity and they can't rely on the other countries, right? So that is going to be a significant increase, and a company like Twill and company Tyrell like DHL are going to be the biggest beneficiary for that.
Right.
And second thing is this: the inverter duty transformers requirement is coming up in a huge number from EU and US now for the next 4 years requirement. So these two are going to be the game changer for our industry in years to 3 years to come, and particularly the company like us.
Got it. Right, we'll come back to you, Mr. Rajora, for a little more clarity on that. For now, what we understand is that the opportunity is large, even though the current numbers aren't as big. Mr. Tiwari, let's come to you now. Raymond already has a fair amount of exposure. If you could quantify that, what's the net exposure to the US and how much is that likely to grow by because of this cut in tariffs? And in the very near term, what kind of improvement in your margins can you see because of something like this?
Morning, everyone. First of all, to understand that this is a very structurally positive steps for the Indian manufacturing exporters. And Raymond is well positioned to benefit across two different businesses. I mean, both across lifestyle and also across the airspace business. We have to understand one thing, that this step has given a lot of competitive gains so far your margin and earning is concerned. And having said that, you see the products of Raymond's were always class apart so far the quality is concerned. Now this support in terms of the tariff which has come for almost all the goods other than the goods which are there under section 232, where the tariff is still 25%, but for other goods it has gone down up to 18%. This gives a great opportunity for us in terms of capturing the white space which is there not only in US but also in UK, which has just.
If you could give us some numbers, Mr. Tiwari, if you could give us some numbers, because you know what we understood is it's about 30-35% of your garmenting business, and the garmenting business by itself is about 25% of your overall revenue.
Correct.
So are we looking at today, close to 7-8% coming in from the US?
So as of today, for my total export which is happening, that is close to around 12% of my total turnover, out of which 6% comes from the US. I mean, the 50% used to come from the US. Now with this steps, we see a very huge growth which is happening in terms of the US demand coming up in the next couple of years, simply because not only the reduction in the tariff, it gives a great impetus for us as compared to Vietnam and Bangladesh, where the tariff is still 20%. In case of India, it has gone down to 18%. So that also gives us an impetus in terms of capturing the market in the US in a very big way.
Mr.
So
Tiwari,
we expect that today the market which we are capturing close to 6% of our turnover, that is going to become in the double digit in the near future. We'll go definitely up to 10 to 12% of the total export which we are doing today. That alone is going to come from the US market.
So, Mr. Tiwari, ballpark, you'll be in the vicinity of around 450 to around 550 crores to the United States right now. Will that be a fair estimate?
Exactly, even more than that, close to 500 crore will reach the target of from the United States.
From the United States, and you're saying that in the next 3 years or so, that number goes to around 1,000 crores exposure to the United States?
Close to 1,000 to 1,200 crore in the United States. Yes.
Brilliant.
What you said is right.
And I think in the recent past, you've said that the government dependency to the United States had reduced from around 50% to around 35%. Now, with this deal being struck, hopefully you go back to around 50%. Would that be a fair estimate?
Exactly, because see, from yesterday only, we started getting a lot of the connects have already been activated, and we started getting a lot of what do you call it?
You must have been up very late, sir, if you're getting already getting the calls in the night.
Exactly.
I think maybe some of his associates were also up late. he was getting an update from there. But Mr. Tiwari,
all-nighter.
US is one. What about EU? You said 6% comes in from the US. How much of that comes in from EU, and what has the change been there for you? How much is the exposure currently? How much do you think that will increase by?
We have a big presence in as a company in Raymond Europe Limited. We have got an office over there, and with this FTA deal which is coming, it gives us a great boundary line, and it gives us an impetus in terms of growing into Europe also. So today we have already increased in Europe post this tariff. I mean earlier. Close to 3 to 4% out of the total one was going to Europe, which has increased to 5%. Now we see this with this FTA, it is going to double up in the next 12 to 18 months.
All right, so both US and European business can double for you in the next 12 to 18 months, both of them accounting for over 1,000 crores each in your overall revenue, taking your exposure to both these geographies to about 2,000, 2,500 crores. Take that point.
In the next 2 to 3 years.
In the next 2
to 3 years, that is what we are contemplating.
All right, take that point. Thank you so much for joining us, Mr. Tiwari. Good luck. You've had an all-nighter. I'd suggest you rest and then maybe pull another one in the night where you will get a lot more inquiries coming in, hopefully given the conversations that you're having with them. But Mr. Rajora, just a final question to you. You said that you have 1,200 crore worth inquiry already from the US, while your revenue is about 150 crores. Importantly, what I want to know, you said next year there will be a change in the US power transformer systems, which will open up a bigger market for you, but that will also open up bigger competition for you as well, right? Because now if you're exporting to the US, India is not the only country. You'll have competition from all the other global players as well. What, in your opinion, will make you best placed to get that sort of market share from there? And of this 1,200 crores, how much do you expect for you to win in terms of actual orders?
Please understand that which are the major countries which are producing the power transformers and have got the capacity available. It is India and China, because Korea doesn't have that much capacity available with them. And with the pricing levels and with the production availability what we have here, India is going to be the natural ally for the US, not only for the transformers but all capital goods industries. This is going to be the biggest factor on this. You need to understand machinery is going to be one of the biggest beneficiaries for this. Competition is going to be really open up, but please understand on the power sector, there are very few players available in globally who can produce the quality products and who can supply the quality transformers for the countries like US and not also to the countries like UK, where national grid is also expanding after almost 45-50 years. Okay. So the companies like us is going to be the biggest beneficiaries, or VHEL is going to be the beneficiary for these kind of things. So this stand very well. And apart from that, there is a huge opportunity of the inverter duty transformers is coming up, which is the very significant in terms of the volume.
Right. Okay, Mr. Rajora, thanks a lot for joining in. As you're saying, it's a significant positive, and as time passes, both your companies will gain considerably. Appreciate you joining in here on CNBC TV 18. We'll catch up soon and we'll track those numbers that you give us. For the time being though, we'll slip into a short break. On the other side, we have another player that's waiting for us. Ather Energy, that one delivered a healthy set of numbers. We'll touch base with the management on the other side. Welcome back. Well, the markets are still holding on to those gains, but a few stocks actually have slipped a little bit from the highs of the day. Some of these textile names have come off just a wee bit from the day's top, but otherwise, it's a good trading session. A lot of stocks actually are moving around. Gokuldas, the larger names actually that started at around 1,000 rupees before the tariffs came, and then they corrected. So they are pulling back, with greater vengeance. A few days ago, we had a resignation at the top at South Indian Bank. So that stock was down, I think, 13-14%. Now that's moved to the high point of the day. Adani Power as well is seeing some kind of traction. So that stock as well moves up. And HFCL, I think they have 20% of their business that comes in from the United States. So that as well has perked up a little bit. Metals have come in for about a profit taking today. We have Nalco that's down in trade. That's down close to around 2%. Sona BLW Precision as well is now down close to around 1% from the top of the day. Still holding in the green, but come off a little bit from the top. Geo Financial is a stock that actually continues to move with good momentum. It's up 7.5%. It's a good move out there. We're waiting by actually. We should get the management of Ather Energy who will be joining in shortly. So we'll wait by for that. But Mangalam, a pretty okay trading session. I don't want to slip even more from here. I want to go home with the gain at least of around 650, 700 points. That'll be a good outcome actually. But the number of stocks that are declining from around 150 stocks, it moved to 250 stocks. And now it's at around 350 stocks.
You take that point, Nigel. And some of the stocks which actually saw a decline after opening have now begun to pick up once again. And some of them who did not open with big gains are now picking pace as well. Something like a PCBL, that's the one that should come up for you, up around 15%, and a fair amount of volumes out there backing that stock as well. Welspun Living for one, at one point had seen a bit of a decline from the top, but now off the lows is the stock up around 19%, 19.19% for Welspun Living as well. We take a short break, come back, get you more on the other side of Chartbusters. Stay with us.
starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them.
We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Srikanth from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine, and we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
I'm very hopeful of a very good deal with the United States.
What excitement, what drama, and absolute rocker of a night, I may say so. The trade deal getting announced. Nifty, historic open, 1,200 points higher. 1,000 points, 26,030. Nifty Bank, 23,050, which is 60,950.
A historic trade deal that has been inked between the India and United States. If you look at the reaction to that on the markets, it's phenomenal. In just the last 3 trading sessions from budget day lows, the Nifty's traveled over 1,300 points, and it's an all green screen. There are weeks where nothing happens, and then there are days where everything happens. You're watching us here on Trading Hour. I'm Mangalam Malu. With me as always, Ritu and Hormaz. Good morning, guys.
Good morning, Mangalam, and what a historic start it has been after that historic deal that we saw, and the markets continuing to trade on those gains. And we always talk about sector-specific stocks and stocks that are buzzing, but it's pretty much green throughout.
It's the entire sector that's buzzing, and sectors are buzzing. But the corporate conversations, of course, can't lose sight of the earnings season, and we continue with that first up.
We do that as well. So let's get across to Tarun Mehta, the co-founder and CEO of Ather Energy, joining in with what was a very healthy third quarter for the company operationally. We'll be discussing obviously the following talking points. One, visibility on margins, whether they turn positive or not, market share target by the end of this financial year, the next financial year, and the impact of higher commodity prices. Let's attack 2 of them. First up itself, thanks a lot for joining in, Tarun. It's been a phenomenal improvement that you've shown in your operating performance, where the losses have narrowed. The reported EBITDA margins are now just -3%. That's an over 1,500, 1,600 basis points improvement. While this has happened on account of increased volumes, improved market share, and increased productivity gains that you got as well, on the other hand, there is this risk of higher commodity prices that may impact your operational performance. So how do you balance these two? By when do you turn EBITDA positive, reported EBITDA positive, and are you taking any sort of price hikes?
Right. So thanks. Q3 was a great quarter for us. We saw a 50% growth in volumes. We saw 1,500 bips improvement in EBITDA. We also saw a good improvement in unit economics by almost 300 bips. This was honestly firing on all cylinders. Unit economics improved because we were able to improve our ASPs, because we were able to drive costs down. And operating leverage was there. We have roughly 4x our volume in the last 6 quarters. So that's kind of played out beautifully in the EBITDA journey. We've cautioned that there are some headwinds potential from commodities in the coming few quarters, and what we've done for that is obviously kept a lot of our engineering bandwidth focused towards cost reductions, but also keeping a tight control over our fixed costs. We want to fast track our journey towards break even as much as possible, so that even if we absorb all these blows, we land up at a better place and stay on a good path.
So by when do you break even?
Results.
By when do you break even?
Always difficult to say, and we don't give a guidance there, but we've gotten pretty close, and we intend to stay.
That's the worry, right? You've gotten pretty close, but the other side, the commodity prices have taken you far away from there. So with all things said and done, maybe, not a particular quarter or any sort of guidance, but any time in the next 3 or 4 quarters, is there visibility for you to break even?
So we've got a few growth levers ahead of us. First, on price hikes, we took a 3,000 rupee price hike just at the start of Q4 itself. That's with the intention of absorbing some of the potential commodity hits here. I think that'll go a long way. We have further cost reductions coming our way. The biggest one ahead of us this year is coming from a transition to the low-cost scooter platform, the EL scooter platform. So between both of these, we expect a lot of gains ahead of us. So we think we should be well positioned to absorb these hits. Thirdly, our software contribution and our non-vehicle revenues have been on a tear. So we had almost 14% of our revenue coming from non-vehicle sources, a large majority of that coming from software sales. So that's continuing to support our P&L massively. And we think this trend will likely continue given what we have seen in newer markets, particularly the northern markets, where the trends have been very encouraging.
Right. So just two questions before we let you go. Two-part question. You can give us numbers. One, your market share by the end of this year, where does it stand? It's about 18.8% right now. What's your target there? And by the end of FY27? And non-vehicle revenues, which is about 13%. You said directionally that is increasing. So from about 13%, where does that go on your market share and your non-vehicle revenues? If you could give us three quick numbers.
So market share, think of this as two different parts of the country. In South, we've been consolidating at 25% market share now for several quarters. And with the current portfolio, we are pretty confident of this. In the rest of the geos, we believe our fair market share lies around 20%. And we've been moving towards that every quarter. So a 20%-ish, 20% plus kind of a market share is our near-term expectation. And on the other question was around
non-vehicle revenue.
So that's compounding really well. So there are two parts. Software sales, we've been able to hike prices of a software also consecutively over every year. But service revenues are compounding in nature given the fleet size. We believe in steady state there is a 3 to 4% potential improvement from this source. So the current 14% could compound to 17-18% over the next few years, driving a lot of margin gains for the business.
Tarun, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the quarters as well. The management there of Ather Energy. But of course, the big talking point, of course, the US trade deal and the impact on these export-oriented names, particularly the textile stocks. You look at Gokaldas, Indocount, all of them trading with gains of anywhere between 15 to 20%, and they are holding on to those gains. The one important factor is the fact that despite the fall that these stocks had seen, now this is as of yesterday's closing, from the 2nd of April when these reciprocal tariffs were first announced, these stocks were down anywhere between 10 to 30%. Now comes the deal. The deal will now bring down tariffs to 18%. This is better than the other export-oriented names, Vietnam and Bangladesh, which are still taxed at 20%. India will be taxed at 18%. So it's a positive for all of these textile companies. Now, the story here is that despite the fall that these stocks saw, despite all of these headwinds, retail investors chose to stick around. And if you look at the shareholding patterns as well for all of these companies, most of these shareholding patterns show that the retail shareholding from the March quarter of 2025 to the December quarter of 2025 has only seen an increase, be it Gokaldas Exports, be it Wellspun Living, be it Indocount, or be it Arvind. All of them have seen an increase in their shareholding patterns, and there you can see. And even Avanti Feeds, of course, the shrimp manufacturer is included in this as well. That is the one outlier, but other than that, it's mostly seen an increase. Now, if you take a look at the mutual funds as well, they too have chosen to stick around these stocks. Gokaldas is a very heavily fund-owned name. Now, from 30% in March, that shareholding has increased to 35% at the end of the December quarter, and for most other names too, barring Avanti Feeds, the shareholding has only increased, even if it is for the mutual funds. Now, that is the bit that the patience is being rewarded, yes, but there's still a long way to go for these names, because despite the recovery that you are seeing today, all of these names are still down significantly from their record high levels, which was either towards the end of 2024 or the start of 2025. Gokaldas is still down 55%. This is as of yesterday's closing, of course. Wellspun's down 43%, Indocount is down almost 50% as well, and Arvind too is down close to 30%. So as of now, the patience is getting rewarded, but still there is a long way to go for a lot of these shareholders.
Yes, the patience is getting rewarded for these investors that stayed put through all of that uncertainty. But let's bring in market experts to get a check of where we go from here after the historic open we've seen and the record rally. Rohit Srivastav and Neeraj Sheth, founder and CIO, 3R Investment Management, are with us now. Rohit, what a historic opening we've had. Where do we go from here? Give us your near-term targets.
So,
while it may look pretty rosy to start with, I think we would want to give it some time to see whether the market can really sustain the big one-day swing. Like what we've seen it do is it's opened higher, but it's sold off during the day. And in the process, we did not get past the January high, which was at 26373. So that does keep odds open that, even if the market just stays at the current level for 2-3 days and we're not able to get past that high, that we may sell off again. Now, this is a risk to keep in mind. On the other hand, if we say that, okay, the markets are going to go higher, make a new high, are we ready for a runaway move? So then I would cap a new high at probably 26,650. That is my best case scenario right now, if at all we do that. But not the preferred scenario. So that's an alternate that we'll keep in mind that, okay, if it does happen, a lot of buying comes in, then okay, we can go till there. But the setup as of now, today morning, remains that we did not cross that high. We sold off from there and the risk is still open to the downside, though we may stay at the current level for a day or two because of the underlying event.
Rohit, you mentioned there is a risk, but they need to cross specific levels. That's for the Nifty. But the Nifty Bank has been the bigger worry, right? From record high levels, it sold off almost 2,000 points. Now it is back at those levels as well. Has that chart structure dramatically changed after this one-day move, or does it show a similar risk as to what you see for the Nifty chart as well?
So unfortunately, it also keeps something open. We also call this an inter-market divergence where, one index does not confirm with others because we haven't seen a new high in mid-cap, small-cap indices, which have only retraced 61 to 70% of the fall that they had seen. So they've actually done far more poorly. I would put a level to watch close to around 60,000 and above that maybe around 60,700 for the Bank Nifty. So these are two key levels above which we would have to sustain to, be able to say that, okay, Bank Nifty is doing something new or something fresh. Otherwise, it would still be just part of what has been going on because we are in the same range we were in December, just a little bit higher or lower.
All right, Neeraj, quickly, your view as well on how you see the markets moving in the near term, whether we can sustain that rally. Rohit was saying we still not hit the Jan 5th highs that we had seen.
So I'm a little more optimistic. Yes, caution is warranted for sure. But at the same time, if you take a step back and look around the broader factors, so the fundamentals, obviously you have a growth impulse that comes from the trade deal. You have a balance of payment, rupee stability. The only negative is the RBI might go on a pause. But alongside that, from a global markets perspective, you're starting to see a little bit of volatility in the AI trade, the volatility in gold and the drop in the gold price in the last 3 trading sessions, the oil price decline. So there are a lot of different factors which I would argue have started to turn the technicals for the Indian market. So would it run away from here? I'm not sure, but at least we are in a more positive technical backdrop given the broader factors that are at play today.
And, Neeraj, of course, the bigger question about whether the foreign money comes back to India after, the kind of year that we've seen. And, the next cue from here, Friday, RBI, will announce its monetary policy. What are you expecting from there as well?
So on the FPI side, I do think this at least is the beginning of the pause of FPI selling. And then if the markets continue to perform and we see some revisions or upgrade in earning projections on the back of the better fundamentals, I do think the FPI turn will happen. On the RBI front, given the backdrop, I would expect RBI to go on a pause for at least now and see how it goes before there's more monetary accommodation is provided to the economy.
Rohit, as Neeraj was also highlighting with regards to gold and silver, do you believe that the top is being made for both of them, at least for now, especially considering the volatility that you're seeing in prices, 10% up today, 10% down tomorrow?
More than at least for now is what I believe. The way gold and silver ran up through January has completely changed the outlook that we have for the next 1 to 2 years. So if you asked me this question in December, I would have said, yeah, you'll get a correction, but it's just going to be temporary. At the most, you get 6 months of underperformance and things could pick up. The parabolic rise of gold and silver in January put them at extremes in terms of their market sentiment, their technical readings that have only been seen
at major tops that are often not surpassed for 2 to 3 years. So therefore, what I'm really looking at is a long period of underperformance as far as precious metals are concerned, and I think that is going to have a rub off on other parts as well. I know there are hopes that PMs cool off and then we continue to see the base metals pick up, but the entire base metal rally was actually on the back of precious metals, and you don't have an oil market rally yet. So broadly speaking, the whole idea that you are in a commodity bull run, I think, is becoming questionable till we get seriously new proof. The bigger rundown to that entire argument would be the dollar itself. I think people got overly pessimistic on the dollar, and that also shows up in the data. The CFTC data was showing one of the largest short positions by non-commercial traders going into the end of Jan. And that has set us up for what we are calling now a dollar rally, or the potential that we've actually turned around, or in the early stages of turning around as far as the dollar is concerned. So we saw a glimpse of that, I think, on Friday and probably a bit yesterday. But it may be something that will continue. In fact, that itself could actually cool off what we've seen as a, not just a precious metals rally, but also an emerging market rally, because the last 12 months have seen spectacular outperformance of emerging markets relative to the US. I know India did not participate in that, and we would really love that happened now that the trade deal is through. But that trade is at its fag end, and we would have to do very quick catch up to really make up for that. Otherwise, we'll just be left, holding the bag over here.
All right, Neeraj and Rohit, thanks very much for joining in with that. Appreciate your views and your time here. We have to slip into a short break on that note, but more on the markets when we return. Welcome back. Time to get you a quick check on the macro signals of the day. The markets opened 1,200 points higher, now trading with gains of about 700 points as we speak. The Bank Nifty stays above 60,000, trading with gains of about 1560 points. That's the markets for you after that historic trade deal was announced. But apart from the markets, the biggest impact that we've seen is also on the rupee. That is appreciated by 1.25 percentage points, now trading at 90.37 compared to yesterday's close of about 91.52 to the dollar. So a lot of move on the rupee if you compare it with some of the Asian peers. Yes, year to date, or rather from the time that the tariffs were announced in April last year, it is the worst performing Asian currency. It lost 2% this year, but then again today alone we made that gain of more than 1%. And going ahead, if you look at the ranges that various people have on the street, anywhere from 88 to 89, which BNP Paribas has, one of the lowest in the street, 88, 89 to the dollar. From SPI all the way to 90.92 from Goldman Sachs. So that's the near-term levels that the street will be looking out for as far as the rupee is concerned. Oil prices, take a look at that. They're also stable. They're noting the impact of production hike being halted from the next month. And of course, Iran and US, that continues to weigh on sentiments. Apart from that, the 10-year yield, now that is going to take its next cues from the RBI policy that comes up on Friday. Currently, slightly lower. You have the 10-year at about 6.725. That's where we're at.
All right, so those are the macro signals. Let's get you a CNBC TV 18 exclusive. Speaking to Network 18, Editor-in-Chief Rahul Joshi, Finance Minister, spoke about easing China FDI rules and all the macros. Listen in.
India's trade deficit with China is greater than about $116 billion in 2025. Even though the exports have also gone up, how do you tackle this issue?
That is where I think we are very clear in Atmanirbhar Bharat. We need to have capacities built in India for those essential goods that we import and make sure that we are able to make it in India for Indian market. Even as I say this, we have not restricted the imports of some of the critical machines or equipments or some raw materials which are so important for our industries. So capacities will have to grow, but in the meanwhile you still need, for those very same capacities, imported equipments. So we are doing a fine balancing act in not denying the raw material coming or the equipment coming, because there are some precision tools which you so need when you're going to set up a particular type of factory. We need those to come in here. Sorry. But at the same time, capacities in India will have to be expanded, ramped up sooner, so that our dependencies can come down. But this story is one side of the coin.
Right.
The other side of the coin is market access in China. I was Commerce Minister, and I know in my time also we've been asking for greater market access for Indian goods.
Right, in China.
That is moving very slowly.
So now that the relationship with China is improving, would you consider relaxing restrictions on investments by China through Press Note 3? That would really take the relationship to the next level.
Well, some discussions were happening. I'm not sure where it has reached as yet. Once we arrive at something, I'll be able to expand on it.
Sure.
All right, and if you look at the trends coming in from the F&O space, a solid day of gains. Nifty Bank, Mid-Cap Index, all of them sitting with good gains. One would argue that they're not at the highs of the morning, but well, excesses are out from the morning, and right now the kind of short positions that are built up will be very interesting to see what the second half of trade will be, because it's Tuesday today. It is also the weekly options expiry. Advance decline firmly in favor of advances. All the portfolios looking wonderful, and just the budget day low of 24,571 seems so far away. It was just about a session and a half away. If you look at Sunday afternoon, that's where the market hit those levels. So from there, it's been a big gain. The Nifty's crossed the 200, the 20-day moving average as well, and currently very close to the 50-day moving average of 25,829. The FIIs, they are 88% short in index futures, and as we speak, this was as of yesterday, as we speak, both the Nifty and the Nifty Bank futures have seen massive short covering. The open interest is down, so today's data will be extremely crucial. What we have right now, on our screens is the 25,500 call, the 25,400 call, and the 25,300 call. All of them seeing shorts being caught on the wrong side, and as a result of which there is massive short covering. So those options come up for you on the screen. You would see there is short covering. So just watch out for the data today. Post-market will be extremely crucial to determine where all the options and the futures writers have been stuck. Take a short break. Come back. On the other side, the management of AkzoNobel joins in. Hey Rajiv, Mangalam here. How are you?
Good to see you. Good to hear.
Yes, apologies for the delay because Donald Trump put a spanner in all our works. Just one request, we're extremely short on time and we have a lot of stuff to play out. So we'll keep this a very short interaction. I'll ask you a question at best, right?
Okay, no problem.
Okay, we'll do a longer chat sometime in the middle of the quarter.
We'll do that.
Lovely. Thank you so much.
Thank you.
Markets continue to do well, but we also have a bunch of numbers to address. AkzoNobel shares trading flat after posting a muted set of third quarter earnings, but importantly, if you adjust for the change in the base quarter, you would see that there was a mild growth in their overall performance. Rajiv Rajgopal, who's the CMD, joins us now. Rajiv, thank you so much for joining in. Three questions. At what level has the integration completed? What's your target revenue and market share and competitive intensity? Go ahead.
Good to meet you and great to be on your show, Mangalam. Thank you so much for having me. I just want to correct that I've got redesignated as the Joint Managing Director and CEO.
Wonderful, yes.
And our chairman is Parth Jindal, and we had our first board meeting under his aegis yesterday. Delighted to be a part of the JSW group. I think me and my team are really now looking forward to being a part of the family and now really getting, I think, the sort of support that we need to win in India. So that's the first. On your question on, what's the targeted market share, how's the integration going? These are very early days. I think I'll leave that for a little longer discussion because at a high level, I think the integration has started going very well. I think, but yet the two teams are running differently. We being a listed entity, we have to make sure that we are within the framework of the rules to operate. And hence, making sure that we keep everything at arm's length is one of the considerations that we have to look at. Nevertheless, in our journey, if you look at the last 3-4 quarters, from the moment that the announcement happened in June, where we had a bit of a depressed quarter, to now, we really started moving from a slight, what I would call relative underperformance to now catching up with industry growth. And I'm keeping my fingers crossed and fairly confident of the days ahead. In terms of specific actions, I think decorative paints, as you mentioned, we saw 2% growth. You've got to look at like to like because you've got to take out the powder coating and IRC business which got moved out, and also a couple of customers which have gone back to the unlisted AkzoNobel powder coating entity. And when you net that off, we had about a 2% revenue growth with about an 8% sort of volume growth, 6% overall for paints and coatings. And I'm fairly confident that now we are back onto the trajectory that we wanted to be. We've started seeing very strong volume growths. 3 things we've done. First, we've looked at pricing very carefully and used basically techniques like conjoint analysis to compare ourselves versus our competitors at a market operating price level and made sure that we were slightly having significant premiums. We corrected a bit to make sure that we get back to our consumer base. Second, we are obviously focusing on innovation to drive brand. And third, of course, we continue to drive distribution in our decorative business. In our coatings business, we've started tying up with marquee brands, including JSW to make sure that we get a lion's share of the entire aftermarket. In our marine and protective and our industrial coating business, we had some challenges in our marine business. We've started getting back to growth, and I'm fairly sure that we've got a robust quarter as we move forward to the current quarter.
Quickly, Mr. Rajgopal, when does the merger with JSW Paints, when does that complete? An exact timeline and the name change? How quickly do we expect that and what will that be?
So first and foremost, as far as the name change is concerned, we've given it to the minority shareholders. We should complete the voting process in the first week of March. It's a lovely name, JSW Dulux. So once that is done, then we start moving in. As far as mergers are concerned, currently the two entities will run for a period of time separately. We'll come back to you with finer details as we progress ahead.
Take that point. Always a pleasure speaking with you. A short conversation, effective one, but we'll have a longer one on the competitive intensity and the way you plan to take your premium market share going forward as well. Rajiv, always a pleasure speaking with you. Take a short break, come back, more on the markets on the other side.
Welcome back. Still 750 points higher on the Nifty, and almost 15 odd stocks on the BSE small cap index are currently in a 20% upper circuit as we speak, including Gokaldas Exports, Indo Count, Kitex Garments, Avalon Technologies. All of them having sensitives to the India-US trade deal are in a 20% upper circuit as we speak. What is not in an upper circuit though is Mahindra Life. That is bucking the trend in today's session, down around 4% is an earnings reaction. Another earnings reaction is Utkarsh Small Finance Bank. That too is down around 3% as we speak. And just pull up AWL Agri. Numbers were flashing just a few minutes earlier at the bottom of your screen just to show if there is a stock reaction to that result announcement. Barely anything. It's still just around 1% higher for AWL Agri. So at least these are some of the names that are not doing very well, and PB Fintech has now become the top loser on the Nifty 500, down around 4.5% at this point of time. And Intellect Design losses for around third straight day, still 2.5% lower after the 2-day sell-off. Now take a short break, back with more on the other side. Hello and welcome to CNBC TV 18. We're tracking the outcome of the big conversation between Prime Minister Modi and President Trump. This deal has gone to President Trump's table at least 5 times in the last 1 year. He was the man. He was the chief negotiator in these trade talks, and finally he has signed off on the deal. While an in-principle agreement has been reached, the final modalities will now take place and the deal will have to be documented and notified. Let me now go across to former Foreign Secretary Kapil Sibal, who has been looking at this issue very closely over the last 1 year. Ambassador Sibal, Donald Trump says India has agreed to buy Russian oil. Our purchases of Russian oil have come down from an all-time high of 45% in our crude basket to 20% in the month of January. It could go down further, but will we completely stop buying Russian oil, as Donald Trump is saying?
Well, I don't think so. Of course, the Reliance has ceased buying Russian oil, and the sanctions are there on the other project that in which the Russians have invested. They have also stopped buying Russian oil, but the Russian oil which is sold on the spot market by Russian companies which are not under sanctions can still be bought if the price is right, if the discount is attractive. So I don't think it will go down to zero, but certainly it has declined and can decline further. Now Trump has to say this because he has to justify why he has suddenly announced this deal. But in the post that he has put on Truth Social, he talks about reducing the 25% reciprocal tariffs to 18%, but he's silent on the punitive 25% additional tariffs on.
So, Ambassador, on that, we've got a confirmation from the US Embassy. In fact, the spokesperson of the US Embassy has gone on record to say that I can confirm that the overall tariffs come down to 18%. So, if it was 50, 25 plus 25, it will come down to 18%. What I would like to ask you, do you think India's red lines on agriculture would have been respected? Because here you have Donald Trump tweeting to say that India has agreed to buy American at a much higher level, in addition to over $500 billion of US energy, technology, agriculture, coal, and many other products. Do you think these will be only niche agriculture items, or we could have probably given in some concessions on wheat, rice, maize for that matter?
My understanding is that some minor concessions had already been offered on select agricultural products, some based on quotas. So that is already part of the deal, but these are very small and they don't touch the core of our red lines with regard to agriculture and dairy and the interests of our fishermen, etc., etc. So I think Trump is now trying to make himself look good, because in order to justify what he's done, which is welcome, of course, he has to show that he succeeded, that his tactics of deal making by imposing punitive tariffs have worked even in the case of India. As you remember, in the case of Korea and Japan and the EU, he announced massive amounts of purchase by these countries or investments, and in the case of EU, $750 billion of investments, and buying American oil and gas and things like that. So in this case, he's also mentioned $500 billion, but he's covered it up by saying, the variety of things that you mentioned, which includes technology and energy and coal and agriculture products.
Ambassador Sibal, my final question before we wrap this, what do you think finally got us across the finish line? This deal has gone to Trump's table 5 times last year. Trump wanted a conversation with Prime Minister Modi. He has been speaking to Trump as well. But what do you think finally got us across the finish line?
The India-EU deal, definitely, because he was using Trump tariffs as a weapon. But what did the Europeans do with India? Reduce tariffs, just the opposite strategy. And I know that the American companies, including the defense companies, were feeling very worried that the relationship was going downhill and it was affecting their business in India. And they wanted this deal to be wrapped up, so the whole thing was becoming untenable. And after this massive India-EU deal, he had no ground left to deny India this deal, because his tactics were not working anymore. And we had signed a deal with the EU, with the UK, and we were negotiating more deals with other countries. So the entire it was quite clear that India was not succumbing to these pressure tactics, and therefore it was a losing game. And finally, Trump has retreated, but he has retreated in a way where he wants to make himself look good, and therefore he has unilaterally announced some concessions by India, which I'm sure, and I'm quite convinced, when actually the details are announced, it will not be what he has said.
All right. Thank you very much, Ambassador Sybil, for joining us with that great perspective. We're going to take a short break. Lots more on CNBC TV 18.
Well, still 25,850, 2,270 stocks advancing on the index and 270 stocks declining. There are some that are still bucking the trend in a market like today, but we'll leave that to the team of Halftime Report to tell you which are those names. Ritu Mangalam and I take your leave. Thank you so much for watching, and news and updates continue.
The India-US trade deal sparks the mother of all stock market rallies in India, with the benchmark Nifty opening 1,200 points higher. Before some profit-taking trims gains, the advance decline ratio is sharply skewed towards advances.
A phone call between Donald Trump and Narendra Modi seals the long-awaited US-India trade deal. Tariff on a wide range of Indian exports will now drop from 50% to 18%. Stocks of textile, chemical, seafood exporters rally in trade.
Indian industry leaders suggest there may be relief beyond the reciprocal tariffs, with the US imposed national security-led tariffs under Section 232 on metals and auto products also being lowered to 18%. PB Fintech's board will meet on Feb 5th to approve a QIP for funding an acquisition. Meanwhile, Aditya Birla Capital's housing finance arm mops up around 2,750 crores from Advent as growth capital for 14.3% stake. Both deals were earlier reported by CNBC TV 18. Hello and welcome to Halftime Report, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Ekta Batra and Vinny Motiwala. You have to say there are a confluence of factors which are leading to the market rally that we are seeing. Of course, we had budget to talk about yesterday. Today, it's the trade deal. And in a few days, we'll talk about the RBI monetary policy as well. So very, very heavy week. But across the board, it's a big gain that we are seeing. Be it the Nifty, which is up almost 1,000 points as we speak, above the 25,800 mark, or the mid caps, which are up 4%, and that has been an underperformer for a long time. Of course, sector specific points we'll discuss in greater detail. For now, we came off from the opening highs, of course, but we have continued to remain around that 25,800 mark. Mid caps also above that 59,000 mark. But again, the opening highs, they could not sustain those levels, but I don't think anybody's complaining today.
Nobody's complaining today. It's surely a good day coming in. Everyone was waiting for this trade deal to happen. There was more on the sentiment front as well. So that is also playing out. And obviously look at sectors. All the sectors today are trading in the green. Realty, financial services, pharma, all of them among the top sectoral gainers. FMCG also is holding on to mild green, but still 0.3% of gain right now, even for the FMCG pack. And advance decline ratio also today, obviously we're seeing in the favor of advances versus declining.
Hi girls, yes, absolutely. You know, the initial euphoria might have cooled down, but for the markets, the message is loud and clear that the India-US trade deal was long awaited and is one of the biggest triggers for the market. Yes, currently we do have the Nifty at around 25,820 odd. It's up around 3 odd percent. We have the mid cap index, which is rallied with a gain of around 3 odd percent. The advance decline ratio has sustained on the advancing side from the get-go. So currently around 3,400 stocks advancing to around 874 stocks which are declining at this point in time. No prizes for guessing that we have a whole host of stocks from the entire textile space which is buzzing around, from the chemical space, all the export focused stocks which are really taking it on in the stride in terms of the gains that we're seeing. But let's focus on our What's Trending segment on Halftime Report. It is the mother of all market moves today. The markets have surged after New Delhi and Washington sealed that long-awaited trade deal with tariffs on key Indian exports slashed sharply. The Nifty opened over 1,000 points higher before some profit-taking set in. And export-linked stocks that are stealing the spotlight in today's trading session continue to be in our What's Trending segment. Let's go across to Hormuz for all the stocks in focus on the back of this trade deal and how it stacks up.
You know, the theme of this basically is the fact that patience eventually pays off, but there is still a long way to go, even if we still consider today's up move. Now, I'm talking about both the export-oriented names and a shrimp name, Avanti Feeds, in this list. But before we get to the numbers, you look at as of yesterday's closing, all of these stocks were still down significantly from the Liberation Day of the 2nd of April when Donald Trump first announced those tariffs. Then the Gokaldas exports was down almost 30%, Indocount down around 10. Arvind had recovered most of its losses, so it was down, it was flat. But and if you go further, the big trigger today is the fact that the deal has been announced. The deal has ensured that the 50% tariff that was currently in place for Indian exports goes down to 18%. That makes Indian exports, particularly the textile segment, more competitive compared to Bangladesh and Vietnam, who are still taxed at 20%. That's a big positive for them. And it's also significant because they get around 50 to 70% of their top line from the US markets. Now, talking talking about patience, even during this period of adversity, this period of uncertainty, retail investors chose to stick around with a lot of these textile names. And barring Avanti Feeds, if you take a look at the shareholding patterns of most of these names, be it Gokaldas, be it Indocount, be it Arvind, all of their retail shareholding has seen an increase from March 2025 to December of 2025. Gokaldas exports increased by 1%, Wellspun saw an increase, Indocount saw an increase, as did Arvind. So retail shareholders chose to stick around for these names. Same is the case with mutual funds as well. And here too, barring Avanti Feeds, most of these mutual funds have increased their stake in these textile names. So look at Gokaldas Exports, the very heavily fund-owned stock is now at 35%, with the mutual fund holdings was around 30% in March of 2025, and same is the case for most of the other textile names. Avanti Feeds, of course, is an export-oriented name, not textile, but that has seen a bit of a moderation when it comes to both mutual fund and shareholding bit. Now I talk about patience. That patience is getting rewarded today, but when I mean that there is still a long way to go, take a look at this plate. You see that despite this move today, these stocks are still significantly away from their record high levels which were hit somewhere late 2024 and early 2025. Gokaldas Exports is still down 55%, Wellspun's down 43%, Indocount is down by half almost. I'm talking about yesterday's closing, of course. So today, yes, there is a bit of relief. There is a rally that's coming in all of these stocks, but still there is a long way to go before those new highs are reached again.
Absolutely is. But thank you so much for giving us the data. Very interesting moves that we've seen in some of these exporters, which have been in focus since the time the negotiations have been going on. In fact, we spoke with the management of Bharat Forge and Ather Industries. They're buzzing on the back of trade deal. Let's listen into what they make of this deal that has come by finally.
It's been a very, very positive development, and I'm very happy that, we have got everything done as far as India-US trade deal is concerned. But I believe from whatever I've heard from this morning from the US and late last night, that Section 232 also is under discussion between India and the US to bring it all to a levelized tariff of 18%. If almost everything will come under 18%.
Okay.
And if we look at our exports traditionally used to be in the region of about 500 to 550 million on a revenue of roughly about 1 billion. So 50% of our exports were to North America. 50% of our revenue came from North America.
It's a great positive for the sector in general and also for Ather Industries. For a country, roughly US accounts for 20% of our chemical exports globally. And in that context, $6 billion worth of chemicals get exported to US from India every year. So in that context, this reduction from 50+% to 18% will help tremendously. Even for Aarti, as part of our total revenue, 17 to 18% comes from US. So it's also a sort of huge positive for us at Ather Industries. But I think more importantly, the certainty will help sort of decongest a lot of decision making that has got hampered in the last 9 months from investments point of view, from future growth opportunities point of view. So overall, a very welcome move and a huge positive for the sector and for the company.
All right, strong moves coming in from a lot of these companies such as Gokaldas as well as Ather Industries and Dixon Technologies, which is higher in today's trading session. The entire pharma pack also gaining. We need to take a short break on that note, but up next we'll be connecting with the management of Jupiter Lifeline Hospitals to discuss their Q3 numbers. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC TV 18. Well, great day for the markets, but let's talk about specific companies now. Ankit Thakkar, who's the CEO at Jupiter Lifeline Hospitals, joins in now to discuss the Q3 numbers and not to forget the announcements with regards to medical tourism, which were announced in the budget as well. Ankit, thank you very much for taking the time out. So before we get to earnings, just wanted your quick thoughts in terms of the announcements, in terms of the impetus on medical tourism by the Finance Minister.
Good morning, Ekta. So I think very welcome. As a country, I think we definitely can and must do more on attracting more medical tourists to India from across the world. Today, most of the medical tourists that come to India still come from Africa and the Middle East. I think we have a lot to do in terms of even attracting people from different geographies of the world. And I also think there's a huge potential to, besides modern medicine, also look at Indian medicine for medical tourism.
Okay, but would you participate in the public-private partnership, something that the government is looking at?
So the fine print is yet to be seen. So far we have not really undertaken public-private partnerships. We have gone fully private. But in spirit, we are fully with the direction.
All right. Well, just narrowing down on your numbers, your volumes were quite subdued this quarter. It was up only around 2%. What impacted volumes this time?
So typically, as I have said in the past, Q2 in Western Maharashtra is a much higher volume season, because besides the steady state disease burden of the community that exists throughout the year, Q2 has a much higher infection load. So Q3 typically would see subdued volumes every year.
Okay, so what are you guiding for?
So I think for rest of the year, you're pretty much flat. Q2 has a little bit of a peak, and the remaining quarters should not see too much of variation.
Okay. But on the other hand, Ankit, your ARPOP, so your average revenue per occupied bed was quite steady. It was up around 10-odd%. What is the mix like when it comes to, say, complex surgeries, complex procedures, and what are you guiding for in terms of an incremental rise?
So on the ARPOP front, two of our hospitals, I would say, are mature now, Thana and Pune both. The ARPOP in these two hospitals should pretty much grow in line with inflation. The Indore hospital still has a couple of more years of growth left in it. So in the Indore hospital, we should see a little higher than inflation ARPOP growth on account of complexity of services improving over the next couple of years.
You also had your Dombivli hospital start, 200 beds. I think it was ahead of schedule as well. So congratulations on that. But what are you expecting in terms of targeted occupancies? And do you think that's going to weigh in terms of your margins in Q4? And if so, how much?
Yes, thank you. I think it was a phenomenal effort by the team. We were able to deliver the entire 500-bed infrastructure ahead of schedule in just 24 months. So that was a great achievement, I think, by the whole team. On the operating side, I think next year or two, you should see a little bit of drag coming on account of Dombivli. Year one end should be a little bit of EBITDA negative, and year two end should break even or turn positive. That is what we are hoping for.
Okay, all right, Ankit, we're going to let you go on that note. Always a pleasure. Thanks very much for joining in and speaking with us. So that's Jupiter Lifeline. That stock up around 1% in today's trading session, saying that they need to look at the fine print of what was announced in the budget when it comes to public-private partnerships over in the hospital space. We'll take a short break, but in our Network 18 exclusive, we will bring you excerpts from the Finance Minister's first interview post-budget after a short break. Stay tuned.
Welcome back to Halftime Report on CNBC TV 18. Nifty manages to still hold on to the 25,800. Above that mark is what it's trading at. But let's move on. And the big newsmaker from last evening, Finance Minister Nirmala Sitharaman, defended the budget in her first interview after presenting it in a wide-ranging interview with Network 18's Rahul Joshi. FM spoke about the hike in tax on futures and options. Here are some of the key excerpts.
The one thing that you did this time, which has become a subject of conversation, the markets also reacted, was increasing STT in the derivative segment. And I've heard the comments by your secretaries who say that it was to curb rampant speculation. Could it have been done differently, by managing margins or contract sizes? And was it a prudent thing to do at a time when the global sentiment is the way it is and the markets are also on a weak footing? How do you react to this?
There are many observations that you're making on which opinions can differ.
Yes.
There are people who within India comment saying India's markets are overpriced. I'm not even getting into that debate.
Sure.
The Revenue Secretary made it absolutely clear. It is not for revenue considerations that we've done this.
Yes.
It is not on all STTs.
Yes.
We are only touching on futures and options.
Yes.
Cash is not even touched.
No.
So it is the speculative tendencies. And in fact, the Ministry of Finance has received several parents, elders who call us and say, are you going to sit and watch people lose money? And one of the studies showed that 90% of people who've gone into futures and options have lost money.
Yes.
Of course, the market regulator will also do his or her bit. The institution will do its bit. So we've only tried bringing in a deterrent where speculation is rife. We are not touching the market. Other STTs are not being touched.
Welcome back. It's a green looking screen, but underneath some stocks which are under pressure. For instance, we have PB Fintech, which is down 5% after 6% downtick yesterday. Fundraise plans for some acquisition. On the back of that, there is some fall on that one. We also have Misho, which is down 5% as we speak. Varun Beverages is the stock on our radar as well. Just reported numbers, so that stock too reacting to the numbers that were just reported. That is doing well, by the way. But the big story remains the India-US trade deal. Let's get in Kirit Bansali, Chairman, Gem and Jewelry Export Promotion Council, and Manisha to discuss what happens with the sector now. Manisha and Kirit, over to you.
Thank you so much for that. Mr. Bansali, thank you so much for joining in as well. I've been talking to you about various FTAs and BTAs and all those travels that you have been doing with the PM. And this is something that you've been waiting for a very long time. I remember our last conversation when you told me this is the quarter, Manisha. It will come in this quarter. It has come.
This is the second time, Manisha, we are celebrating Diwali. Second time. This is really joy moments for my sector. Everybody is very happy. Since morning, I'm receiving so many calls. It's a joy moment for all of us. As you are aware that we have seen decline in export in US with high tariff. It's a big relief for the entire sector. We are so happy. And I must congratulate our Honorable Prime Minister, Shri Narendra Modi ji, our Commerce Minister, Shri Piyush Goyal ji, Jai Shankar ji, and Finance Minister Nirmala Sitharaman. This is the result of their tireless effort, day and night. You are aware, Manisha, how many meetings they have done with US counterpart, with different time zone. When I was speaking to Commerce Secretary, Rajesh Agrawal ji is involved directly from in the deal right from first day. So he has so many sleepless nights.
I'm sure.
Today I spoke to him also, and we all are celebrating this great moment.
Absolutely. Mr. Bansali, we do understand that the US is the largest market for India when it comes to gem and jewelry. I would love to get two numbers from you. One, from April to December, when we talk about exports to US, what is the kind of declines that we have seen, and what is it that you're working on right now?
So if I describe in a segment wise, we have seen 60% down in loose diamond and overall decline 44%. It's a huge decline, huge decline.
Mr. Bansali, now that you've done so many more FTAs as well. I mean, you found opportunity when the US market was not working. We've seen UAE gain up for you, UK, you've been working on Australia, you've also been working for European Union for that matter. What is it the new financial year looking to you now with all of these markets on with you and the US markets also opening up?
Manisha, let me recall my one meeting with one-to-one with Honorable Prime Minister at his official residence, where he has clearly stated us that the government only cannot do everything. All the business leaders will have to come out from the comfort zone. All the EPC will have to work hard. This tariff, how much time it will take, it is very uncertain, difficult to say, but we will have to explore new market. And in that process, let me say you that in spite of decline in US, we have maintained that 19 billion target till November.
While we are all
action given by our Honorable Prime Minister,
sure,
every business leader will have to come out from the comfort zone and work hard towards Viksit Bharat.
Oh yes, we do understand, Mr. Bansali, that all of us are awaiting the detail of this agreement. The notification and details is something that all of us would want to look at. But what is it that you are hoping to see in this trade agreement?
See, I'm waiting for the final outcome. But I'm hoping that loose diamond and jewelry will be zero, as our ministry and our Commerce Minister have worked very hard. And we have received some support from Washington, D.C. also. So wait and watch. I'm crossing my finger. It will take another 1 week time or 10 days time for the final clarification. But with 18% also, the entire sector is in very much relief, very much relief.
Mr. Bansali, I do understand that a lot of Indian companies, listed and not listed, have been opening their stores in US. The expansion work is ongoing. With this agreement now going through, are you looking at more and more Indians exploring US, in sense of business there?
100%, right from Tanix to Malabar to Kalyan, everybody is seeing a huge market. Retail sector in US is if we talk about, I was said you in past also, there are 70,000 retail outlet already working in US. with this relief, I'm sure that our retailers will open the door.
How are you looking at the other markets performing as well? Because there are other FTAs also in work. Are you looking at overall growth going forward? I mean, any number that Council has been able to come up with on how much will US recover like, and what are you looking at in sense of various other countries?
I'm looking forward, Manisha, that we will bounce back definitely. Whatever in 2023-24, we will achieve this figure in 2026 for sure. And I'm hoping that because this inventory in US is at the lowest, so there will be huge demand, and 2026 will be a very good and very positive year for the general sector for as far as the US is concerned.
All right, so the US inventory for jewelry is also at the lowest levels, and the demand from India, of course, is going to be quite positive. So absolutely a very, very positive time for the Indian gems and jewelry as a segment. Mr. Bansali, as always, thank you so much for joining in.
Thank you so much, Mr. Pansali, as well as Manisha, for taking us through that conversation as well. One more sector which is steering the India-US trade deal as well. But on that note, we're going to slip into a very short break. We'll continue our discussion on India-US trade deal and also connect with Neelkant Mishra of Axis Bank. Stay tuned in.
Welcome back. Well, for the markets, we have the Nifty, which is up around 2.8%, the mid-cap index, which is up around 3% at this point in time. Just want to point out specific stocks. So Adani Enterprises is seeing good gains. It's up around 11.5%. But let's move away and talk about one specific company which is in focus, that is Spark. Spark, which is basically Sun Pharma's R&D arm, and there's news around that where the US drug regulator has granted priority review voucher to Spark, which is basically for the approval of one of their drugs which is used for neonatal or children's pediatric seizures. Now this PRV, which is priority review voucher, allows the FDA faster review for a drug, and it's transferable, so it can be worth around $200 million if in case Sun Pharma sells it, and that equals to around 40% of its market capitalization. So that's the reason why you're seeing Spark actually sparkle in today's trading session. We'll take a short break, but up next we'll get you that continued coverage on the India-US trade deal and that promised conversation with Neelkanth Mishra of Axis Bank. Welcome back. Our special coverage on India-US trade deal continues. My colleague Prashant joins us, and we are also joined by Neelkant Mishra, Chief Economist, Axis Bank, and Head of Global Research, Axis Capital. Prashant, take it away.
Sonal, thank you so much for that. Neelkant, thank you very much for coming back on CNBC TV 18. You know, as they say, when it rains, it pours, right? Budget, trade deal, and what's next? I don't know. But let's just, this is a happy moment, happy occasion, long delayed, and it's finally come through, and the shape and form that it has come through in, which is 18%, and we've spoken with, market participants and economists and trade and otherwise. This is better than what many of our competitor exporting countries have. Your first 2 or 3 sort of, reading of what has been announced, and how durable is the impact of this going to be on the real economy and of course on financial markets?
Look, I must say that I think the removal of this overhang is a very important step. I think as the public pronouncements from the leaders have suggested, these are 2 very large economies, 2 of the largest democracies. I think more than the dollars that start flowing because of this, I think the symbolic impact of this is extremely important, is very high. I think the removal of the overhang is very important, specifically for sectors. Now, beyond that, I think the economy had already started to adjust to the 50% tariffs, in the sense that overall exports had in September to November 2025 had actually grown faster than they did FY 22 to 25. As you know, there are many sectors which are exempt from IEEPA tariffs, electronics, pharma, petrochemicals, etc. So those have been growing very well anyway without this deal. The commodity exports, like say shrimp, they were anyway there was trade diversion, meaning that if the US market was shut, they started selling to China and Japan and Europe. There were sectors where I think there was some transshipment also starting to happen. And by and large, the tech side FDI had also been happening. So even before the new ambassador announced that India was going to be part of Pax Silica, the investments from the US hardware tech names from India were actually quite robust. But that does not mean that the deal has no value. There were sectors like gems and jewelry, apparel, auto components, where there was very visible impact of the 50% tariffs. I think for the businesses and the employees of those businesses, I think this is a big relief. What it also allows the businesses on both sides to do is now start planning for non-tech FDI. So on the tech side, it was very clear because not subject to IEEPA, as well as it's very hard to compete against China without India. But on several others, I think the FDI, the non-tech FDI, this does open the door and reduces significant uncertainty. The last point on INR, the sentiment on INR, remember that, unlike say a bond or an equity, the currency actually has no anchor, so there are no earnings. There are no book value, no coupons to value it on. So sentiment, sometimes the currency falls because everyone thinks it is likely to fall. This is a very welcome move. I think it boosts the currency, provides it much needed stability.
Yeah, no, absolutely. On the textiles, marine products, gems, jewelry, etc., how quickly do you think order inflows will turn towards Indian exporters?
Look, the biggest season of the year is the holiday season. So starting from Thanksgiving in the US, that is, in the Thanksgiving for April, for Thanksgiving and ending with Christmas. There are though 4 seasons, and every season there is a refresh cycle and there is a discount cycle.
Right.
So it may be too late for the spring, but maybe for the summer, autumn, and winter, maybe those can actually still be in play. And that should be, so maybe 3 months, because anyway, every 3 months there is a refresh.
Yeah. Neelkant, the other areas, right, which is the services exports and people movement to the US, where there were lots of concerns whether there will be some protectionist measures which will be imposed at some point in the future. That idea was thrown around. You think that also goes away now with this deal?
Yeah. So anyway, those were irrational fears to start with. You look at the fact that services exports from India have been growing in double digits in dollar terms. And with the changes announced in the budget, where the safe harbor clause has been extended, it looks very nerdy and technical. But just think about a foreign firm wanting to set up a GCC in India, and I think to reach 2,000 crores of revenue, which is now the upper threshold, it'll take several years. So for several years, they don't need to bother about a tax authority so long as they're willing to disclose 15.5% as the markup in India. I think this just accelerates that process. And so that fear was, I think, unwarranted and misplaced anyway. But it's very unlikely that, there will be changes on H1B and all that, because that is politically sensitive within the US. So the MAGA crowd will not like it.
Yeah. The rub-on effect of this deal on what the reaction we're seeing on equities, we'll have to see how durable this is, and then the wealth effect sentiment-wise on the broader real economy. You think it could be meaningful? No.
See, you see, if the 50% tariff was not that negative to start with, remember, it was $85-90 billion before, of course, the very fact that there will be relatively less tariffs is helpful, but nearly half of that was exempt from IEPA, the IEPA, the reciprocal tariffs and the penalty, the punitive tariffs. And there is a very high likelihood, in my view, that the IEPA tariffs will be declared as unconstitutional. In which case the US government, through a whole range of statutes, can decide to levy the same tariffs again on every country. So very likely, given how much revenue they're collecting, it will be in this 17-18% range. So at least there is tax certainty now, and we don't have a big disadvantage. But to say that, it is going to really boost, I don't want to sound like a wet blanket on what is actually a very positive day.
I take that, the point is that if it didn't hurt in a big way, why should it help? That's your point, right, Nilkant?
Yes.
But the point is, just to counter, it's like, it's your salary is 100 rupees, and it doesn't, you're used to 100 rupees, it goes to 200, you're used to 200. And incrementally it has to go up from there, right? So I'm just saying, index is at wherever it is, and we're used to it. So I'm just saying, if the FI is done,
this is incrementally positive. This is incrementally positive, and I said the biggest, I think, positive is on the currency. And given how I think the volatility in the currency market had started to seep into the money markets, and through it in the overnight lending rates, the CDOIS spreads, the fact that was also then starting to show up in bond yields. I think all of those risks then take a backseat, and all in all, see, this is a very important overhang being removed.
Absolutely.
For those of us tracking the tech sector developments, the fact that all of this drama was unrelated to a more strategic break from India. That's not a positive surprise, but for many who actually thought that perhaps in the attempt to get closer to China, the US was going to sacrifice India, I think for those people at least, this is also a very welcome development. They should reassure them.
Nilkant, just last thing, 30 seconds. There is this is it, right? There are no nuances, detail, etc., which will throw us off in the coming days, right? Because the full agreement will have to be, but there won't be that many white spaces in that sense. Otherwise, they won't announce it like this, right?
Look, again, I don't want to sound like a wet blanket, but if you think that a trade deal is a trade deal, you talk to the Koreans and the Canadians, as some people have been tweeting about. See, and even the fine print of the executive order, we haven't seen the executive order yet. The details on the Indian side, of course, the deal is signed, it's effective, but I doubt that many concessions have been given on agriculture from India's side. Most of the things we saw in the budget were pretty much the adjustments that needed to be made. But these things can be volatile. I mean, we know how the US administration has been changing deals on the fly. So it's a good move. I mean, I don't want to sound too negative on a good day.
You are sounding not negative, but you're sounding a little cautious. And
because I don't think it is that important. I think for the economy, if you are able to get a rate transmission going, I think
that will do the job.
Happens in these deals is actually far less important than that.
Okay, well, everything helps, right? Little bit. So we'll see. Thank you very much, Neelkan, for joining us. Great conversation as always, and appreciate your time here on CNBC TV 18. Well, I think we'll say goodbye on this program, but we'll have business lunch, which will pick up on the action in just a bit from now. Stay tuned. Markets, of course, looking very good.
Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, it's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them foolishly. We weren't charging them.
We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
Very hopeful of a very good deal with the United States.
What excitement, what drama, and absolute rocker of a night, if I may say so. The trade deal getting announced. Nifty, historic open, 1,200 points higher. 1,000 points, 26,030. Nifty Bank, 23,050, which is 60,950.
This is positive from a sentiment point of view. The markets was lacking a catalyst, and this certainly comes as a catalyst.
The India-US trade deal sparks the mother of all stock market rallies in India, with a benchmark Nifty opening 1,200 points higher before some profit-taking trims gains. The advance decline ratio is sharply skewed towards advances.
A phone call between Donald Trump and Narendra Modi seals the long-awaited US-India trade deal. Tariffs on a wide range of Indian exports will now drop from 50% to 18%. Stocks of textile stocks, chemicals and seafood exporters are rallying.
Indian industry leaders suggest there may be relief beyond the reciprocal tariffs, with the US imposed national security-led tariffs under Section 232 on metals and auto products also being lowered to 18%.
PB Fintech's board will meet on the 5th of February to approve a QIP to fund an acquisition. Meanwhile, Aditya Birla Capital's housing finance arm mops up 2750 crore rupees from Advent as growth capital for a 14.5% stake. Both deals were earlier reported by CNBC TV 18.
Finance Minister Nirmala Sitharaman, in an exclusive chat with Network 18, says she will be focusing on divestment and the budgeted target will be met. She also clarifies that STT was levied only to curb speculation and the government is not ignoring the rupee but taking a realistic approach.
It seems like the night has never ended. It's still continuing from where we left off from yesterday. You're watching Business Lunch. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Horvas Patakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Horvas. Hi, guys. You know, we started with the budget this week. Now we have this big trade deal, and then we've got the monetary policy to look forward to. But what a day. Nifty opening over 1,000 points higher. Coming off those highs a little bit, but nothing to complain right now.
Why would you complain? Yeah? 700 points higher. You don't see that every day on the index, right? As a 1,000-point move, although was the biggest in history in absolute terms for the index, still managing to hold that 25,800 mark as we speak. And nobody is really talking about the fact that today is the weekly expiry of the Nifty. That is usually the big talking point on a Tuesday. But the big talking point today is, of course, the trade deal, and that's showing up on the market as well. Now, you know, the Nifty Bank as well, that was the one that was leading the laggards over the last few days. And the Nifty Bank, after the kind of rebound that it has seen, 1,500 points higher now on the index, above the mark of 60,000. We spoke to a lot of experts earlier in the day, and they've mentioned that the 60,000 mark is going to be a very important one for the Nifty Bank. Just a couple of sectors, of course, the textile names continuing to have that 20% upper circuit, the Gokal Dases, the Wellspuns and the likes continue to trade with gains. Then just pull up Zydus Wellness. There is an earnings reaction that has come in just a few minutes earlier. The textile names, of course, 10 to 20% higher, but Zydus Wellness reported a net loss this time around compared to a profit last year, although the operating performance though was stronger on a year-on-year basis. But the stock has slumped to the lows of the day in a market like this when almost everything that you see is in the green. The Zydus Wellness is down 4%, and the other one that's not in the green is PB Fintech. It's down around 5.5-6% on last check. The board meeting on the 5th of February to consider fundraising, it's 5% lower there as well. So there's plenty of red, plenty of green actually, some red as well today.
Very little red, but lots of green, and those sectors, so many sectors doing well. As Hormas pointed out, chemicals, all of those export-facing stocks doing really well. On top, leading the pack is that realty pack, which is doing really well in trade today. All of those stocks in the green. We've got even pharma, we've got the auto stocks, all of them doing well today. But beginning with the top story of the day, after a long wait, India and the United States have finally agreed to a historic trade deal. The United States will cut its tariff on Indian goods to 18% from 50% earlier. The tariff on India is the lowest amongst emerging market peers at 18% and significantly lower than that of China, which endures a tariff rate of 34%. The United States ambassador to India, Sergio Gore, also told us yesterday India would also stop buying Russian oil. Also hear out what the Commerce Secretary had to tell us last night.
We remain engaged, very positively engaged, and it's progressing very well. The two frameworks are still in place. The larger framework is going to take time because US is a big economy and a larger, deep, wider FTA will always going to take time. But the one which can be done in the short run is the one which is an early harvest, can address the reciprocal tariff bit, is also getting shape. When it will happen, how fast it will happen, these are the questions. I think I'll not put a date to it, but we are hopeful that we should get it sooner than later. One of the key discussions in this is how we are able to align our tariffs on both sides to see that we work towards a more balanced trade between the two nations. So that is going to be the core of whatever we achieve in the first.
And here's what market veterans have to say on the deal announcement and its impact on the markets.
I agree, Nigel. I think the markets was lacking a catalyst, and this certainly comes as a catalyst. In fact, I jokingly say that people had just stopped even talking about stocks. It was all about gold, silver, and I have never seen phones not ringing after a budget the way this time it was quiet, because no one was just interested in knowing what to buy. So I think this comes as a very, very pleasant surprise. It helps I would say the mood, which was the most important. It definitely helps the economy, the corporate profit growth, and hopefully the currency should also respond. So I think all in all, the positioning is light. FIs have been short, has been seen by the futures, open interest. Position on the domestic side, at least on the speculative side, is low. And expectations after the budget fall were also very, very low. So this definitely comes as a big, big catalyst.
Undoubtedly, Prashant bhai, this is positive from a sentiment point of view. There was a hanging sword on Indian equity rates and currency market because of uncertainty over US tariff deal. Obviously, we stimulated our economy, so from a growth point of view, there was no negative impact. But there were sectors like textiles, aquaculture, handicraft, gem and jewelry, which were getting impacted. Now, this first boosts sentiment. Second, it provides support to sectors which I mentioned. And finally, Prashant bhai, we have to go through the details. Devil is always in the details.
Completely understand the way markets are behaving. People must have been short or there is a lot of excitement. But I would expect, just like it did not have too much impact on the downside, I don't think there is any durable, meaningful impact on the upside either. But it's a very good thing to happen. Foreigners have been underweight India for three simple reasons, in my opinion. One was India was pretty expensive 18 months back. Second, earnings estimates were very aggressive. We were simply extrapolating the faster growth in earnings coming off the COVID lows. And finally, I think India was missing the popular narratives of these times, which is AI or semicon, etc. And these were the reasons why we saw so much selling. I think with the currency where it is, with the valuations having come off, with so much selling behind us, I think I would be a little more optimistic on foreign flow.
So which sectors are in the spotlight? once the worst hit sector with a 50 to 70% revenue exposure to the US, is now flying high. Gokul Das, KPR Mills, Wellspun Living all surge as India, with an 18% tariff, is now placed better versus exporters like Bangladesh and Vietnam. The managements of Raymond and Perel Global are also bullish on the US business. Listen in to what they had to tell us.
Of today, for my total export which is happening, that is close to around 12% of my total turnover, out of which 6% comes from the US. I mean, the 50% used to come from the US. Now with this steps, we see a very huge growth which is happening in terms of the US demand coming up in the next couple of years, simply because not only the reduction in the tariff, it gives a great impetus for us as compared to Vietnam and Bangladesh, where the tariff is still 20%. In case of India, it has gone down to 18%. So that also gives us an impetus in terms of capturing the market in the US in a very big way. So we expect that today the market which we are capturing close to 6% of our turnover, that is going to become in the double digit in the near future. We'll go definitely up to 10 to 12% of the total export which we are doing today. That alone is going to come from the US market.
News that has come in the last night. Definitely we look forward to the growth both in the top line and bottom line in India as well. Bottom line, this is a kind of advantage that we are giving to the customer just to maintain the business in India. So our customers give us the choice. Either you make this production from the other countries and, which is more of the same balance. Everybody within the 19-20 range of tariff. Now, to compensate that out of India, we were giving this 50% discount. So that I think goes away. So I don't think it's like passing off. It was not a sustainable thing to pass off to any customer. So I think this will definitely come to the bottom line.
The textile stocks doing well for themselves today, continuing to trade with gains of 15 to 20% as we speak. Now, the reduced 18% levy is expected to help auto ancillaries sustain their global order inflows and aid their margins as well. Now, we spoke to Bharat Forge's Baba Kalyani, who told us that demand could rise up to 25% in the next quarter. Listening to what he and the management of Ramkrishna Forgings had to tell us earlier in the day.
It's been a very, very positive development, and I'm very happy that, we have got everything done as far as India-US trade deal is concerned. But I believe from whatever I've heard from this morning from the US and late last night, that Section 232 also is under discussion between India and the US to bring it all to a levelized tariff of 18%. If almost everything will come under 18%.
Okay.
And if we look at our exports traditionally used to be in the region of about 500 to 550 million on a revenue of roughly about 1 billion. So 50% of our exports were to North America. 50% of our revenue came from North America.
On that note, it is time for us to head into a short break, but more news and updates coming up on the other side. Stay tuned.
back. The markets are doing what they are after the announcement of the trade deal, but the other major reaction has come in the rupee, and that is of course after it strengthened by over 1%, buoyed by this trade deal between the two countries. Dealers, however, say that further gains will come only after one sees foreign funds bringing in the dollars and buying Indian equities. Lata is here with more on this. Lata.
Yes, first the number, the rupee opened 1.2% higher. In number terms, it was about 90 rupees 40 paise to buy a dollar. Let's remember it closed overnight, that is on Monday night, at 91 rupees 52 paise. So, you know, it was a gain of over 1 rupee 20 paise when it opened. The point is, you know, New York trades, what we call the NDF trades, offshore market trades, that had already started reacting to the news overnight, and there we had seen 90, 60, 90, 50, so it was expected to open higher. And even on Monday, we had seen the rupee trade or end the day a good 0.5% higher, and people were saying it's not because of RBI. There doesn't seem to be dollar demand. It looked like already the short rupee long commodity currency trade was shifting, and that's why the rupee is strengthening. We now can realize that some people in New York probably knew or were smelling that the deal is coming. But the important point is the huge recovery of the rupee was unaided by the Reserve Bank today. Dealers said they were not in the market trying to lessen the appreciation as was expected. The key point is dealers don't expect a further appreciation immediately because they want to wait and watch to see whether foreign investors are coming in. Ultimately, you want an actual flow of dollars, not just, you know, that our exports should grow, but on a daily basis, we want FPI flows, and we don't know as yet whether the FPIs are convinced enough to come and buy dollars. So 90 will not be crossed, is what the economist from Goldman Sachs told us. Also because the Reserve Bank will not want to lose the advantages of a weak currency. Depreciated currency makes exports attractive, makes imports difficult, so domestic industry gets a better chance. And finally, there are others who say that the striking of the deal will ensure that India's growth itself improves a bit, and therefore the foreign investors will come. So BNP Paribas' view is that in the medium term, that is by the time we reach middle of this year, we are going to look at it 88 to 89 rupees to buy a dollar.
All right, Lata, many thanks for taking us through those details. But as promised, let's shift focus to the bond market. Manisha Gupta joins us now with all of those details. Manisha? Well, it has been a back-to-back action in the Indian markets, whether it is about equities, rupee and bonds for that matter. After that big reaction to the India's budget, where we did see higher than expected borrowing and expenditure from the Indian government for FY27 slated out, it really is about the US and India trade agreement, and that seems to be ruling the markets right now. So we have seen the bond yield slip slightly, 4 to 5 basis points as the markets open today. Well, India and US finalizing a long-awaited trade deal has supported the equity markets, which have jumped up. We saw the rupee open up by nearly 121 points on the higher side, and the bond yields seem to be taking their sense or support from there as well. Interestingly, the trade deal positive possibilities are quite a bit, and that is where we are looking at support coming in from. The markets do believe that FPIs will come back to the Indian equity and debt markets, and that would bring in liquidity and more action coming in here. It also is about inflows of further dollars coming into the market. There also is a possibility of Indian bonds getting included in other global indices as well. So whichever way that you look, it seems quite positive to the markets right now. The support from the Indian rupee, the inflows of the US dollars leads to be supporting bonds right now, with markets believing that this week at least this euphoria could just about continue.
Manisha, thank you for that update there. Numbers from Adani Ports flashing at the bottom of your screens at 22% revenue growth compared to last year, 9704 crore. You look at the operating performance as well. On the margins front, has the company fared? 21.2% growth in the profitability as we speak compared to last year. So 8% higher, still holding on to gains from the morning is Adani Ports. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Earlier in the show, we spoke about PB Fintech as the one stock that is bucking the trend today. That is because the sources are saying that the board is going to announce a fundraise on the 5th of February. Yash is joining in with more on this. Yash, what is the kind of quantum that PB Fintech is looking to raise here?
Well, Hormaz, just yesterday we had reported that the management is expected to approve a large fundraise for supporting a major acquisition which the company intends to make. In continuation of that, what sources are telling us is that the size of the fundraise itself could be upwards of about 3,000 crore rupees. PB Fintech at this point of time has about 5,500 crore cash on its books, and according to our sources, the size of the acquisition could be upwards of about $1 billion. So it's going to be a large fundraise with a large cash already present on the books for the purpose of supporting an acquisition which could be upwards of about $1 billion. As far as the acquisition and the geography itself is concerned, we've been told that the company is evaluating a couple of target companies in UK as well as Europe. As far as the board meeting is concerned, the next one would be on February 5th, where the size of this fundraise would be finalized and announced to the exchanges. But importantly, what I've been told is that this particular acquisition would be in the space of insurance product distribution and aggregation, similar to what the company does in India. Of course, this would be in the international market. What I've been told, as I said, the geography could be UK or Europe.
All right, Yash, many thanks for those details. Now, it is a CNBC TV 18 news break confirmed. Advent International is all set to pump in 2,750 crore rupees into Aditya Birla Housing Finance. Let's go across to Rachna Dhanrajani, who broke this story yesterday. Rachna, how much stake will Advent hold?
Well, this does mark a CNBC TV 18 news break confirmed, and it marks one of the largest capital infusions in India's housing finance sector in recent years, that is. Now, the boards of Aditya Birla Housing Finance and its parent company Aditya Birla Capital have approved this proposal. The investment will be made through Indriya Limited, which is an Advent entity, and the deal is structured as a primary capital infusion. Completion of the transaction is, of course, subject to shareholder approval and regulatory clearances and other customary conditions. Now, let's first understand why does this deal matter. The 2,750 crore rupee check significantly strengthens Aditya Birla Housing Finance capital adequacy and balance sheet, providing firepower to scale its loan book at a time when housing financiers are preparing for the next phase of credit growth. Now, the capital is expected to support expansion in affordable and mid-income housing segments that continue to see resilient demand driven by urbanization, infrastructure-led development and policy support. Now, housing finance companies are also under increasing focus from regulators and rating agencies to maintain stronger capital buffers and diversify liabilities. A large long-term private equity infusion not only supports growth, but it also gives a chance to enhance confidence among debt investors and bond markets. Now, this deal also comes amid a broader revival of investor interest in India's housing finance space. Over the past 12 to 24 months, that is, we've seen Shriram Finance, Warburg Pincus deal happen, we've seen Aavas and CVC deal happen. So against this backdrop, Advent's 2,750 crore rupee investment stands out as one of the biggest primary equity infusions in the company. Now, this is second only to outright acquisition or deals like Shriram Housing Finance that I mentioned. But this particular transaction is also interesting because this marks Advent's second stint with Aditya Birla Group. The global PE firm was previously an investor in the parent company, that is Aditya Birla Capital, and has since monetized parts of that exposure. Its return this time, though, is to the subsidiary is very focused, and it of course shows the renewed conviction that people are seeing in the sector. With this specific bet that Advent has made, things are looking up for Aditya Birla Housing Finance.
All right, Rachna, many thanks for taking us through all of those details. But with that, it is a wrap on this edition of Business Lunch. Mid-cap radar takes all the action forward.
Good afternoon, welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. A stellar rally all around, but we have come up from the opening highs. That's of course an important note. We are still awaiting a granular detail of the tariff cut that has come by, but for now, markets are cheering that on.
Good afternoon, Sonal. Absolutely. Most of the exporters locked in the upper circuit. Most of the stock seeing a lot of positive momentum leading to a very strong advanced decline ratio. A lot lined up on the show. Some important corporate conversations. So let's start off with the top headlines. The India-US trade deal sparks the mother of all stock market rallies in India, with the benchmark Nifty opening 1,200 points higher before some profit-taking trims gains. The advanced decline ratio is sharply skewed towards advances.
PB Fintech's board will meet on February 5 to approve a QIP for funding and acquisition. Meanwhile, Aditya Birla Capital Housing Finance arm mops up 2,750 crore rupees from Advent as growth capital for a 14.3% stake. Both deals were earlier reported by CNBC TV 18.
Textile stocks are now flying high. Gokul Das, KPR Mills, Welspun Living all surge as India, with an 18% tariff, is now placed better versus exporters like Bangladesh and Vietnam.
The reduced 18% levy is expected to help auto ancillaries sustain global order inflows and margins. Bharat Forge's Bhaba Kalyani tells CNBC TV 18 that demand could rise 25% in the next quarter. Okay, all right, those are the top headlines that we are tracking. Of course, the biggest news being what's happening with India-US trade deal. Finally, there's some clarity. Markets were in the wait and watch mode for the longest time. Rupee was also depreciating on the back of no clarity there, and that has come in as a big positive across the board. And the commentary from managements and sector specialists and market guests also have been quite positive on this move. Of course, we're still waiting for granular details as to what all comes under this, what is exempted. So these are some details we'll keep getting for you. But let's do one thing. Let's get to the first management on the show. Vishal Thakkar, Deputy CFO of Anupam Rasayan, is joining in now. Vishal, good afternoon. Thank you so much for joining in. The overall chemicals industry has a 20% exposure to the US as a market. How is it for Anupam Rasayan in terms of numbers, and how does it change things for you? You also made a major acquisition in the US recently. If you can explain how things change now from 50% to 18% now.
So Sonal, first, thank you for getting us on your channel. And yes, I think it's a fantastic time for India and chemical manufacturing industry, and especially for somebody like us. If you look at it, India exports over 20% to US and another 70% to Europe. So overall, 35-40% of India's exports is having a favorable outcome over the last 1 week. Even if you look at from a budget point of view, we have had a very good budget from setting up domestic infrastructure for manufacturing, including 3 chemical parks. So that really helps out. And if I speak specifically for Anupam, yes, this acquisition could not have been better time. I would just say that it's a fantastic opportunity for us to offer a broader basket of portfolio of products across various end markets, be it the polymers, pharma, agro. In pharma, KSM especially, where US is having a very high focus, semiconductors. Also in terms of the larger valuation that we will be able to offer to our customers, I think this is one of the very buoyant and very interesting 1 week that we have seen across Europe deal, budget, or the US now announcement from the US government. So I think we could not have expected anything better than this.
Vishal, give us particular numbers. You said the overall industry, these are the exports, 20% to US, 17% to European Union. How much it is specifically to Anupam Rasayan? And on the acquisition side as well, you say that you will get better markets, but having a facility there already wouldn't have impacted you anyway, right? 15% tariffs or 18% tariffs. Or it did get impacted because you would have to get some products from India for production. I'm just trying to understand how is it different for you now?
So now, if you look at any of these kind of industries that we are, we're an industry where anybody is looking at a supply chain solution. They are looking at a relationship of over a decade and otherwise, and they look at larger trends, larger connections that you have. So yes, the manufacturing from Jayhawk would not have mattered in terms of the tariffs. But if you look at a combination, when I go to a customer and say I can offer you a supply chain over India and US, your ability to attract that business anyways is higher, and then with this kind of an event really helps us even further to offer that. So that's what I'm trying to say. Even if you look at from a
quick clarification we'd like from your end. What we want to understand is before today, what was the total tariff that was applicable for you? And before both of the deals, what was the tariff you're paying to EU? What was the tariff you're paying to US? Post this deal, we understand it will drop down to 18%. So we want to understand whether there is a material difference.
Okay, so let's talk about Europe. Europe was anything between 6 to 13% that we used to pay. My customers used to pay effectively, and today it will be zero. From the US point of view, there were few products which were exempted, but there were few where we were paying a higher duty, and that will now come to 18% as we understand.
So how much
are yet to be seen, but a priori understanding that we have from the announcements is this range. So yes, there will be a delta for us as Anupam. There will be a better, one thing that we have to also understand, the people like us who are into CSM, CDMO play, the contracts that we get is over 5, 7, 10 years period. Now there, the visibility of the tariffs, visibility of the supply chain is far more important along with the rates. So to that extent, it will matter to us. It will matter significantly to us.
Okay, all right. We take that point. Vishal, thank you so much for joining in today. Market's in a different mood, so we have to address that as well. But a pleasure speaking with you. Thank you for explaining the impact of both the EU FTA and the US trade deal as well. We'll slip into a short break. When we come back, we'll connect with the management of Intellect Design Arena to decode their Q3 numbers. Stay tuned for that.
Welcome back to Mid-Cap Radar. Well, one particular company that saw a muted quarter in Q3 was Intellect Design Arena, a name from the mid-cap IT space. We can welcome Arun Jain, Chairman and MD of Intellect Design Arena. Well, thank you so much, Mr. Jain, for joining us. You know, the first question which we want to ask you, and which has led to quite a bit of a sell-off as far as the stock is concerned, has been the muted margin performance both on a year-on-year as well as on a sequential basis. Analysts on the street were anticipating a steady state run rate of over 20%, but this time around it's been quite muted. What is the reason for that, and when can we expect a recovery?
Yeah, so thank you very much for inviting me to this call. And on an ongoing basis, we are saying we are a business which should be tracked on LTM basis, last 12-month basis, not quarter on quarter, because single license revenue could be as high as 50 crore to 100 crore difference can create a margin difference. So margin trajectory should be looked at it from the annualized basis. We have last 12 months, we crossed 3,000 crore, very significant mark in Indian IT industry. A product company is crossing 3,000 crore revenue in last 12-month period. Our revenue grew 23% on LTM basis. My margin grew 33% on LTM basis. My cash position moved 49% year-to-year basis, point to point. Now, this is a phenomenal quarter from our internal perspective. Quarterly number, we cannot manage, and we don't want to manage, because the deal sizes are big, contracts are complex, and they cannot be tracked on 90-day period.
Got it. So, Mr. Jain, since we are not talking about quarterly numbers, on a FY26 basis and FY27 basis now, if you have some visibility, what kind of margins are you looking at? Will they, on a consolidated basis, see the 20% mark? And in terms of growth as well, what kind of deal wins and growth are you looking at?
Yeah, so if I look at it, our three businesses which you started, GTB business now is a 1,400 crore business. GCB business, consumer banking business, we started in 2018. That is close to 1,000 crore, 960 crore. The AI business we started in 2021 with the wealth and insurance included is close to 500 crore business. So these three businesses are healthy businesses. Our geography distribution is Americas, which is giving 25% of revenue, will be close to 1,000 crore. With the new deal signing it up, it will further accelerate. Americas, Europe is another 25% of revenue comes from there. And rest of the 50% comes from Middle East and Africa itself gives the 600 crore revenue, and then India and APAC. So I think this is a second lever which is there. Third is the tech edge on eMAG.ai. Fourth, opportunities are, what you asked the question is, what opportunities are there for next year? There's a huge shift in moving from mainframe to cloud business. So big opportunities are coming because MIPS rating in mainframe is 5 times more expensive than cloud migration. So that's the other area where the big opportunities are coming us our way. These deals are big in size. So these deals can run into double-digit millions of dollar deals. So that's why it takes time to close those deals. AI, it's a big driver for us to look at it. So from all the four angles, opportunity angle, tech edge angle, geography angle, product edge angle, we have distributed our multiple.
Mr. Jain, we understand the business opportunity and we appreciate that. So, can you distill it down and can you quantify it? So, FY27, what is the kind of growth you will end the year with, even if we track it on an LTM basis? And FY27, what kind of growth are you seeing, and can we expect margins to recover back to, double digit or even 20% levels that earlier you used to enjoy?
That's right. So, you want to push on the right number. I'm saying we designed the business for 20% growth year on year.
Okay.
The business design we are talking about, and margins are also about 20%. Now we are in the investment phase. We moved to 25% and come back to 21%. So these are the two bandwidth range we designed the business.
Take that point. Mr. Jain, we have a lot more questions, but you would appreciate we are speaking to you on a day when markets are soaring high on the back of US-India trade deals. So we'll keep this conversation some other day. Thank you so much for joining us and patiently answering those questions. We'll slip into a short break now. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back. You're still tuned into Mid-Cap Radar. Well, in a market where most of the sectors are in the green and other stocks, couple of outliers. PB Fintech, we've spoken about the stock earlier as well. It is at the day's low as we speak, down 6% after the cuts that the stock saw yesterday as well. Some fundraising plans, some acquisition plans as well, but the street seems to take it the other way. We do have Misha as well, which is down around 4%. Varun Beverages, after the numbers, that stock is also on our radar. It's down around 3.5%. But rupee is set for the biggest single day gain versus the dollar, and it is up around 1.3 rupees against the dollar. So that is another big story that we are tracking very closely, the rupee move after the big depreciation that we saw in the last couple of months. With that, we'll do one thing, take your leave on this edition of Mid-Cap Radar. Stay tuned, your stocks when we return. Good afternoon. You've tuned into CNBC TV 18. You're watching Your Stocks coming live from the CNBC TV 18 Motilal Oswal studios. Obviously, we had the US-India trade deal that came in, and that is why this is a special edition of Your Stocks today to answer all the stock-related queries that you all have sent us. I'm Vinny Motiwala. With me is my colleague Sonal Butchwa as well. Sonal, good afternoon. Nifty managing to hold on to the 25,800 around that mark. Advance decline ratio obviously clearly in the favor of advances versus declines today. Oh yes, continues to be a big day for Indian markets. But of course, as we've been pointing out, the details matter a lot, and that is something that we'll be analyzing and getting for you. But yes, you all have sent in a lot of queries related to stocks that depend on US with respect to their exposure and are impacted by this cut in tariffs as well. So to answer all those queries related to such stocks, we have with us today Saumil Mehta, Head of Alternate Research, Capital Market Strategy, Miray Asset Chair Khan, and Gaurang Shah of Geopolitical Financial Services. Gentlemen, good afternoon. Thank you so much for joining in. And you know, we have received a lot of queries for stocks which have exposure to US in some or the other form. So let's get started with the first one. Krishna Prasad is writing to us from Kerala, holds 2,500 shares of Sona BLW at 477 rupees a share. He asks if we should continue to hold or exit at current levels. Auto Anks, they continue to be in focus because they do have big exposure to the US markets. Gaurang, come in on this. Handsome profit here for Krishna Prasad. Do you think they should continue to hold it or add at current levels as well?
Thank you so much, Sonal, for having me on the show. Good afternoon to all the viewers of CNBC TV 18, to you and to your entire team, and of course, Saumil, my good friend as well. A small disclosure that all recommendations that I'll be sharing with you this afternoon on the show are a part of our fundamental research team recommendations. Our company Geojit or myself, we do not have any kind of investment interest, no financial interest, no conflict of interest, but we share similar advice with our clients. They might have their investment interest in the portfolio. So I think a lot of negativity will get cleared once we have a detailed verbatim from Minister Piyush Goyal. I guess he's supposed to address the Parliament at 3 p.m. this afternoon. We still don't know the contours of it, but primarily all those sectors that were beaten down, be it textile, be it auto ancillary, be it gems and jewelry, be it aquaculture stroke marine, specialty agrochemicals, will tend to benefit out of these positivities that we'll have to wait for some time for the details to emerge. As far as the question on Sona BLW, well, it's a well-established company. There is no doubt about it. Large part of their business operations are focused in US and related European countries. If auto sector is going to do well, Solar, definitely auto ancillary, tire and battery manufacturing companies will do well. I won't be able to give specific buy, sell and hold on Sona BLW because we don't have a coverage, but a competitive advantage is definitely there over here.
Okay, surely a competitive advantage that is there. But Saumil, what's your view on the technical front for Sona BLW? They bought it at 477, making a profit. Now with this trade deal also coming into place, could we expect it to go further up?
Good afternoon to everyone. Absolutely. It's been consolidating for a very long time now, below 200 daily exponential moving average. Now today, yesterday actually I was talking to my team as well that this is a breakout levels, and it has already given us a breakout above the previous swing high in the monthly charts, quarterly charts. So it's a great stock to be in. My next target on the stock would be 560, and above that would be 610. So these are the two targets, and the base for this stock now becomes 480 and 440 levels. So that will be a base for the stock, and I'm not expecting the stock to go below those levels.
Take that point. So that's in Sona BLW Precision. The stock is up 5% as we speak. Let's go to the next query that we have. Shatish Kumar writes to us from Mumbai, holds 50 shares of Ather Energies at 2,463 rupees. He asks if he should hold the stock for the long term. This is one space which did generally very well, and it has some exposure to US markets as well, and some US rulings that impacted the moves in these Indian names. Gaurang, comment on this. What do you make of Ather Energies in particular, or any other stock from this solar equipment space?
Well, so we do have positive coverage, again a disclosure on Ather Energies, and not only there is a lot of opportunity now for the export related geographies where these companies have their footprints, but a lot has happened in the domestic market as well with the government's new policy rather, Sonal, for new power generating capacities that are going to come up. a large part, 75% plus, is going to be clean and green energy with respect to solar as well as wind. From a long-term point of view, we do have positive coverage on Ather Energy. So if you're a long-term investor, hold on to it. Other investment ideas, this one would be a little bit high beta, high risk counter, but we do have positive coverage on Suzlon as well. So.
Okay, Suzlon and Ather Energies also, you have a positive outlook there. Yes, they do have exposure. Around 28 to 30% of the revenue is mainly from the US as well. Saumil, on the technical front, the viewer has bought it at 2,463. Obviously, they're making a profit on this one today as well. The stock is up 12%. What is the level that one should keep an eye out on, whether stop loss or continue to hold it? What's your view?
The viewer has actually bought it at the bottom. Great buy actually. It has broken some very crucial levels on the upside. Now the trend reverses from these levels and it is trading about 20-40 daily moving average. It is trading about 200 daily moving average. Previous swing high on the monthly charts has also broken on the upside. Looks great to me. Hold on would be my suggestion. 3,400 would be my target in the short to medium term outlook. But I think in the longer term, it would perform really well from here.
Okay, on the long term, Ather Energies would perform well. Let's get to the next query. Kiran Jain is writing to us from New Delhi. She asks if she can buy shares of Avanti Feeds for the short term. There's a big fundamental change, but since the question is for short term, Saumil, let me come to you first up, and then Gaurang, tell us your long term view on this one. Saumil?
It has broken out of a triangle pattern. It is a gap up opening, a gap up breakout actually. Now, short term trading I will not suggest, or even medium term. The stop losses are too deep. 740 would be the stop loss, but I think whoever has this in your portfolio should keep it for a target of above 1100 or so, because the next wave has already started in the monthly outlook, monthly charts, which has a target above 1100.
Okay, and Gaurang, your view on this one, Avanti Feeds?
Well, so I was expecting a question on this. To be very honest, Sorel, I beg your pardon, Ravini. Good afternoon to you as well. So we have positive, not only Avanti Feeds, but Apex Frozen Food also features in our fundamental coverage. And these were the stocks last year, April 2025, when President Trump announced tariffs. These stocks hit maybe lower circuit, if I'm not mistaken, and if I recollect right. I think opportunities will definitely open up with the details contours that will be known later on in the day. Hold on to it from long-term point of view. It's 20% circuit Avanti Feeds now. Don't rush into it, to be very honest, Vinny. Give it some time, let it settle down, let the euphoria settle down, and possibly at lower levels you can either make new investments or you can average as well, both on Avanti Feeds as well as Apex Frozen Foods.
That's what actually going to be my next question, because we've seen this surge already and anything can come out in the fine print, right? So should investors hold on to current levels? They should wait for some correction. At what level do you think it becomes a good buy, both Apex Frozen and Avanti Feeds, Gaurang?
I think Saumil is the right person in terms of levels, to be very honest.
No, I meant to say fundamentally, valuation wise. I'm not asking from a technical term, but there are times when stocks are not fairly valued as well, despite the sharp fall that we saw in the last couple of trading sessions. That's why I wanted to ask from a fundamental viewpoint.
So Sunil, I think don't go into it with a FOMO fear, with a FOMO factor. These stocks were beaten down when the negativity is there, and now with the positivity is emerging, I think these stocks will definitely tend to outperform. And more importantly, Sunil, India will have, according to whatever details are known to us up till now as far as this trade deal is concerned, at 18% tariff rate, that's the figure. Then we become more competitive compared to our neighboring countries or the APEC region. So the possibility of a larger market share as far as exports are concerned, it will definitely be there. I think sub 900, if you get an opportunity, maybe tomorrow, day after, or next week, once this euphoria cools off and we have the details in front of us. So at lower levels would be, and do a staggered investment. So I think that's the best approach in any fundamental strong stock. Don't try to time it. You waste your time trying to buy the stocks at a particular level. So make a beginning, maybe somewhere close to 900, sub 900 would be a decent level to start nibbling into it.
Okay, that's for Avanti Feeds. Sonal asked you about Apex as well. You gave your view there because the next query is actually on Apex Frozen. Ritu Srivastav, she's holding 200 shares and this is at a price of 400 rupees. So, on the technical, Sonal, for Apex Frozen, what is it looking like? She is making a loss on this one right now. It's at 351. What should they be doing?
Hey, hold on to it. Definitely in the last 3 or 4 months, it has been consolidating about 200 daily moving average. It has been forming higher tops, higher bottoms. So it's a good chart today with a gap up opening, a circuit, 20% circuit. I think it looks good to me. Triangle breakout on the upside on the daily charts. The next level on the upside would be 366. That will be my target in the medium term. But on the upside, I think the final target in the medium term outlook would be 440, 450. But I think the entire range from the last 6 months has broken on the upside. So even the long term outlook starts becoming great from here.
Take that point, Samil. We have to get into a quick break, but to a lot of queries on the other side. We'll answer them after this short commercial break. Welcome back. You're still tuned into your stocks on CNBC TV 18. We still have with us Saumil Mehta of Mirae Asset Share Khan and Gaurang Shah of Geojit Financial Services. We are answering all your queries related to the stocks that could be impacted by the changes in the US-India trade deal. Let's get to the first one now. Shaleen Sharma writes to us from Mumbai, holds 700 shares of Bharat Forge at 350 rupees a share. Now that the deal has been sealed, wants to know if she can add more shares. She bought it at around 350. The stock is at 1544, so it's a substantial gain that she's already seen. So from a long-term perspective, Gaurang, do you think she could add at these levels, or do you think the stock is valued at the correct levels? I can see that smile. I'm trying to understand what that smile means, though.
No, that's fine, because I was just thinking how stock markets can create wealth, Solan. She got it at 350 and the stock is trading at 1500. This can be a perfect example of how being invested in a fundamentally strong stock rewards you over a long period of time. So she's deep in the money. I don't think she's got any reasons to worry. Again, a disclosure, Sonal, we do have a fundamental coverage on Bharat Forge from a long-term point of view. So here is the point. The situation as far as Class 8 trucks, chassis are concerned to exports to US, I think the opportunity will definitely open up a lot more. Secondly, as far as the domestic side is concerned, this companies also have invested, in fact, rather heavily into defense as well, and it's specialized into artilleries and automatic arms and ammunitions. You want to add on to it? Again, I would say the stock is up somewhere close to about 7% today. Add this small quantity at current levels, and you can possibly use dips to average further at lower levels. This will eventually, because you got it at 350, if you average it at 1500 or thereabouts, it could inch up your investment cost. But nevertheless, it's a very strong fundamental company. I would definitely say average small quantity at current levels and rest on dips, and continue to hold on from a long-term point of view.
Okay, continue to hold on for the long term. That's the fundamental view. On the technicals, Samuel, what's your view as well? The viewer is making good amount of profit already here. So what's your suggestion here now?
Absolutely, a perfect investment, example. A very good stock to be in. One of my favorites for a long-term, portfolio stock. I think hold on would be my suggestion. You can add more if you want. 1650 would be a medium-term target, but for long-term, I think the previous all-time high should be cleared. But now the base on the downside would be around 1300 levels. I'll not be expecting this stock to go below 1300. So this level is around 200 daily exponential moving average, and we've seen this entire consolidation around those levels. So long term, definitely hold on.
Take that point, Saumil. In fact, we spoke to the management of Bharat Forge on the India-US trade deal announcements. Listen into what they have to say.
It's been a very, very positive development, and I'm very happy that we have got everything done as far as India-US trade deal is concerned. But I believe, from whatever I've heard from this morning from the US and late last night, that Section 232 also is under discussion between India and the US to bring it all to a levelized tariff of 18%. If almost everything will come under 18%.
Okay.
And if you look at our exports traditionally used to be in the region of about 500 to 550 million on a revenue of roughly about 1 billion. So 50% of our exports were to North America. 50% of our revenue came from North America.
Okay, let's move on to the next query for today. We have Bhuvan, who is writing to us from Pune. He's holding 20 shares of Siemens, and this is at a price of 3,892 rupees. Wants to know if he should continue to hold or sell. Gaurang, there are a lot of these cap good companies also who have exposure there, like Apar Industries, that's managing to hold on to very strong gains in today's trading session. Siemens as such also is a good name that comes in here, but your view for this one, what should they be doing now?
So not only will this open up avenues for cap goods engineering space in the export related, but even in domestic market. Look at the kind of Capex that the Honorable Finance Minister Srimati Nirmala Sitharaman ji has lined up, not only this time but in the budgets gone by, and of course I am assuming that the similar is going to be the case. So There are, other than Siemens, of course, as a disclosure, we do have a long-term positive coverage on Siemens, but other than Siemens, we are positive on companies like L&T, Thermax, ABB, mid to small cap company, KC International. So domestic market is buoyant for these companies, and I think the only trigger now awaits is the kickoff of private Capex. I think if these three combinations get together, it will be a good opportunity for clear earnings visibility for cap goods engineering companies. So hold on to Siemens, and you can also look at other companies that I mentioned.
Okay, all right. What about you, Saumil? How do you look at this particular stock?
Siemens definitely looks good. It has been consolidating for a little while now. I'll wait. If I want to add more from here, I will wait for a breakout about 3,420 and then I will add. But if somebody is already invested, please hold on to it. Looks great to me. I'll expect this entire consolidation to break on the upside, and the targets on the upside would be above 3,800 levels.
Okay, 3,800 levels, target on the upside. That's the word there on the technical front. Next query for today, we have Sridhar, who's writing to us from Coimbatore. He's holding 50 shares of Vaibhav Global. Price is 799 rupees. Also NIIT and 1,360 shares, and price is 227. What should they be doing with both these names, Gaurang? Vaibhav Global also does have some exposure there in the US.
So very unfortunately, we don't have coverage on either of them, so I won't be able to give you a buy, sell and hold. But my sense is that look at stronger players and larger names with a clear visibility in terms of taking advantage of this trade agreement with US and taking their business to the next level. Unfortunately, no specific coverage, so I won't be able to give buy, sell and hold on either of them.
Okay, take that point. Thank you so much, Saumil and Gaurang, for joining in today and taking us through your outlook and your recommendations on specific stocks. With that, we'll take your leave on this edition of Your Stocks, but do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.
Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights and unlocking the potential of India's growth blueprint. Beaming live from the CNBC TV 18 Motilal Oswal Budget Headquarters.
Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, it's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them foolishly. We weren't charging them.
We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
Very hopeful of a very good deal with the United States.
What excitement, what drama, and absolute rocker of a night, if I may say so. The trade deal getting announced. Nifty, historic open, 1,200 points higher. 1,000 points, 26,030. Nifty Bank, 23,050, which is 60,950.
This is positive from a sentiment point of view.
The markets was lacking a catalyst, and this certainly comes as a catalyst.
Well, that is, of course, a sum and summation of everything which has happened, how it started, and how it's come to fruition, and a happy kind of sort of ending for now, right? 680 points is a good-looking screen. It's not at the day's highest point, but 25,770 is where we're at. Last hour coming up. This is Closing Bell. We are coming to you from the CNBC TV 18 Motilal Oswal studios. We've got Rima in green and Nigel joining in. Guys, hi, afternoon.
Hi, afternoon. So shorts are getting covered, and plus it helps that today is also the Nifty weekly expiry. Adani Group stocks are on fire, 10-12% kind of up move, and then you've got a 10-20% kind of gain coming through in the textile, gems and jewelry, the Avanti shrimp related companies, and the advanced decline ratio. I think since morning you've been saying, look at that advanced decline ratio, 2,500 stocks gaining, 2,200 stocks gaining. It's held up.
Like Prashant said, it was a rocker of a night, and it's a rocking day as well. The bulls will have not seen something like this. Rima in green and a lot of stocks in green, beautiful looking screen. But I'll tell you what, the rupee is the most heartening aspect, right? Because it's done a swift 92, almost at around 90. Beautiful, right? I mean, the Lanavla to London plan can restart, I think. So the drift from, from London. Nice, good to see some strength on the rupee. I think that's an important barometer, and I think post-market hours we have our hands full because there'll be a lot of short covering that we'll have to analyze. Let's see whether or not we get a large buy number coming from the FIs. But it's a very, very good trading session, and it's been so long since we said that.
And making it to Tanishq is still tough, huh? Because gold and silver prices have recovered very sharply.
I spoke to two investors, not a lot, two, but fairly decent foreign investors in the last 2-3 hours or so. And the general feedback, I'm just summarizing that, well, this will run maybe for the next couple of days or so, but eventually we'll have to see what is the actual earnings, will it lead to, and the answer to that is a little skeptical. Will this lead to a really big earnings bump or anything of that sort? We actually had Neelkan Mishra on the air at mid-afternoon, 12:30, 12:45 or so, and he also was. He kind of said he rated credit transmission into the economy much higher than, and his point was, well, it didn't hurt, so why should it help?
Correct.
In that sense. But I think sentiment is underrated, as Rhythm said, and sentiment makes a lot of difference in that sense. So we'll pick it up from there. Nigel, your
NMDC's numbers. I think it's more or less in line, a little bit softer on the margin front, but I think that's par for the course. Last quarter, actually, the realizations were under pressure. But what could have helped that top line is that the volumes were much better on a sequential basis as well as on a year-on-year basis. So that explains why NMDC more or less flattish on expected lines, you'll have to say. The net profit number is appearing a little bit higher. That's because the top line was higher, but the margins actually are more or less in line, and the absolute EBITDA number is in line. So I think the bulls will take that. But Prashant, the important point the Rhythm made yesterday, both for life as well as for markets, sentiment is very important. And the way he put it, right, you wake up some morning, you're feeling very, very good. You go out there, you shop, but if you're not feeling good, you don't do much about it.
As the Gen Z, was the Gen Y, Gen Z. Or the Gen Z put it, vibes.
Good vibes. Good vibes only.
Sentiment is equal to vibes. I think good vibes are important in that sense. Well, last hour coming up, right? Mitesh is with us with what he'd want you to do in terms of positioning, because, I mean, it's trade management, risk management, and position sizing after a run-up like this, which is going to be important. Mitesh, good afternoon. Good to have you here. So what would you advise viewers do?
Look, in terms of the index, I would still want the chart to settle down a bit. We had a big gap up and then tapering off. As I said, I think a big gap up should not be chased. That was the only understanding. And also is the fact that the market kind of just went near the earlier highs of 26,300 plus levels and then declined from there. So for the time being, I think I'll wait it out on the index. Though I think this gap up, kind of negates the bearish move which is happening till yesterday afternoon. So I think that has been taken out, but we haven't had signals of a positive movement starting. So just hang on. What could be interesting to watch is the Bank Nifty. The Bank Nifty has never had a closing about 60,200 levels, and we are close to that. So, wait and watch kind of a mood going on. On the stock side, Coforge is something, which has come on my buying list today. That's a stock which has done well, after correction is trying to reverse. So recommend a buy here. The stop just below levels of 1689 and a target around 1775. Can that Bajaj Finserv is another one which is a buy with the stop below 1994 and a target around 2065 is what I would look for.
Got that. Thank you very much for that. Mitesh, we'll come back to you. For now, it's over to Ritu. She's compiled what brokerages have said on the India-US deal and the way forward. Ritu.
Well, no two ways about this. The street sees this India-US trade deal as a clear growth positive. So Barclays, for instance, calculates that the India trade-weighted tariff on exports is going to fall to around 16.3% from 35.7%, which is the effective tariff currently. And that's a meaningful reduction in the trade cost, which puts India firmly back in the trade competitiveness play. But Barclays also warns that some of the key conditions are still unresolved. So India's stance on Russian oil purchases, the commitment to buy large volumes of US goods, these are not mentioned by Prime Minister Modi in his tweet anywhere. And these are the factors that are going to influence how the deal plays out in practice. So fine print is something we still have to wait for. But if history is any guide, we've seen what happened with South Korea and Canada, where initial tariffs underwent big changes, and you can't really rule that out with US President Trump. But Barclays says markets have probably priced in the best possible outcome as of now. They're also not rushing to change the FY26-27 GDP growth forecast, which is still retained at 6.5%. From JP Morgan's standpoint, export-oriented sectors like your textiles, gems and jewelry, leather, chemicals, etc., they stand to benefit the most, with potential for increased foreign investment there, a stronger rupee and clearer earnings outlook. They also reaffirmed their Nifty year-end target of 30,000. Bank of America takes it even more optimistic view. They estimate that the effective tariff can drop all the way to 12 to 13%, and that gives India one of the most competitive export tariff rate in the region. They also see this as providing significant relief, especially for labor-intensive segments, and point to an upside risk to India's FY27 growth of around 6.8%.
Well, absolutely, and this has done its job. Ritu, by the way, the RBI meeting later this week, right? It's on
Friday. Friday 10 a.m. is when we'll hear. So far, the consensus is building towards a hold.
Yeah, but big OMOs?
Big OMOs to support the yields. Despite all that RBI has done, record high OMOs, they've not really come down from 6.7% kind of a level.
So that's the other trigger for financials once it happens. So we'll have to see if the OMOs do come through. But as Ritu said, in terms of rates themselves, it's likely to be hold. Well, so much has happened, right? There's the budget, and then of course after that there's the trade deal. So compared to where we were last week, just how you'd go into the policy, perhaps a little bit different in that sense. Gurmeet Chadha is with us with what he's making of things. Gurmeet, good afternoon. Good to have you here. So what's the we spoke after the budget, and now of course this is of course a much more pleasant thing to discuss. So this 3-4% across the board indices move has happened now, right? So what's the best way to position yourself for making money from here, Gurmeet? Do you think small and mid caps, that part does well, so maybe get some exposure through a ETF? Actionable stuff that one can do here now.
So hi Prashant, I think this is how quickly things change, in markets, and we keep discussing that 2 or 3 days in a year actually make a big difference in your overall returns, and that is why it is important to stay invested, at least as far as your core allocation goes. I think a lot of stocks will see a bit of a re-rating, especially sectors which have been impacted due to tariffs and US exposure. We are already seeing upper circuits in a lot of textile stocks, whether it is Gokuldas or KPR, etc. Then I also think there will be some, once there's more clarity on Section 232, etc. I think even in some auto ancillaries, there will be very good movement, because if you see from the top, they've been quite suppressed, and auto numbers have been exceeding, doing very well month on month. So, players like Sandhar Technology or Uno Minda, Sona BMW, Mothersons of the world, I think there is some bit of action which should play out there. I also think with some of the cloud over IT companies, mid-cap IT services company, in terms of deal wins, etc. Although there's already a bit of a, some companies have done well. I think that would play out. I think something like a KPIT, which is really corrected, and it's more like an auto tech. So actually, I think there's a large universe which is down 30-40%, despite Nifty being 27,000-28,000, and there can be reasonable upside there. So you got to increase a little bit equity allocation. 2-3% doesn't make a difference. I also think the growth numbers, GDP estimates will get revised for India with a lot of foreign brokerages.
IT, though, is having a slow day, Gurmeet. Tech Mahindra has dipped into the red. KPIT Tech, a stock that you were talking about, is flat in trade. Wipro, LTI Mindtree, Tata Elxsi, HCL Tech, all just up a meager 1%. And the other pocket which is slow today are some of these FMCG-related names. So Tata pull up a Dabur, pull up a Colgate, and you would see flattish moves coming through. So Gurmeet, you said it's time to increase equity allocation. We know about the stocks that you like, and I presume you're topping up those. But any fresh ideas post the earnings season?
So, as I said, we are looking at some of the auto ancillaries and related plays. We recently added Raj Ratan Global Wires, which basically makes bead wires for tires. They had an issue in terms of their Thailand unit not doing well because of dumping from China. I think that's behind, and they've set up a new plant in Chennai, which will meaningfully start contributing both to volumes and a bit of an operating leverage playing out. The stock has seen a very healthy correction of what it was 2-3 years back. So we've added some chemical names like JG Chemical, which is again into zinc dioxide, where again the end use is more tire, which is again linked to auto. So that's something we've added. We've added a little bit to some of the large cap names, which is Bharti and M&M, etc., wherever the movement is more modest. And we are looking at some more weightages in pharma and defense names, because we are looking at more 2-3 years. We are not really looking at on a daily movement. I think there is a lot of re-rating left. And then you have a Biosecure Act, which at some point of time will see the light at the end of the day. So as I said, you have a lot of options now. And I think if you should probably start front loading it a little bit, and then any interim volatility in between can be used to, so maybe 30% now and the balance over maybe next few weeks.
Okay, all right. Gurmeet, a quick word on Gokuldas. You had briefly mentioned it. I think you'll had that stock. I'm not sure whether you'll still have it. What are you doing with that? Are you looking to add now?
We wanted to, Nigel. Unfortunately, we didn't get anything since morning. It's been on the circuit. But we took the pain. We actually entered 2-3 years back. So from our price, obviously it's done 2x, but obviously it's went up to 12,1300 and is down. So I think we'll continue to hold. I think because there's a lot of margin impact a lot of these guys have taken. And I think with the EU FTA also you'll have more, although they said they are full till early part of 2027. But this is very timely. I think the next season will not get spoiled. A lot of unlisted guys, Nigel, are our clients in Narayana, in Gandhinagar. A lot of the local wholesale garment market here. There was a lot of pain there, and I'm more happy because this is a very labor-intensive sector. A lot of women labor involved here. So I'm most happy for textile. But this will be a tactical play. You can't really buy them and hold. At some point of time, you'll have to take a call. But I think I see some more upside coming over the next few days here.
No, I think that's an important point, right? There's the market, of course, but there's also livelihoods, etc., which were impacted, disrupted, and so some relief there, and should happen actually fairly quickly, because that was the other question: how quickly will these export orders start to come through towards Indian companies, MSMEs, etc., with these tariffs, which are now very competitive. So the feedback is, well, it should happen pretty quickly. I asked that question to Mr. Vadhavan, the former Commerce Secretary, and that was his response. Some numbers from Adani Enterprises, revenues are up 9%. I think you got the profit number coming through as well. But one name, market's going one way, one stock is going the other, which is PB Fintech, right? And we reported yesterday during market hours that there's during the board meeting for results, and by the way, the results are strong. They're going to consider a fundraise for a potential acquisition, and it did happen. The company confirmed exactly that. So that newsbreak was confirmed. We have more details now in terms of the quantum of the fundraise and some more indication of what they are planning to acquire. Yash is here with details. Yash, take it away.
Just yesterday we had reported that the management is expected to approve a large fundraise for supporting a major acquisition which the company intends to make. In continuation of that, what sources are telling us is that the size of the fundraise itself could be upwards of about 3,000 crore rupees. PB Fintech at this point of time has about 5,500 crore cash on its books, and according to our sources, the size of the acquisition could be upwards of about $1 billion. So it's going to be a large fundraise with a large cash already present on the books for the purpose of supporting an acquisition which could be upwards of about $1 billion. As far as the acquisition and the geography itself is concerned, we've been told that the company is evaluating a couple of target companies in UK as well as Europe. As far as the board meeting is concerned, the next one would be on February 5th, where the size of this fundraise would be finalized and announced to the exchanges. But importantly, what I've been told is that this particular acquisition would be in the space of insurance product distribution and aggregation, similar to what the company does in India. Of course, this would be in the international market. What I've been told, as I said, the geography could be UK or Europe.
Yash, thanks very much for that. Gurmeet, any thoughts on this one? Market's not taking a very charitable view. Numbers were strong, but 2 days, 10-11% correction.
Prashant, it happened earlier also when they announced something to do with health, and then there was a reaction. So I think we'll have to wait what the acquisition is. Operationally, numbers look good. Also, the last quarter is the best quarter for most insurance companies. This anyways is an aggregator. And there is some cloud over the commission as well. So a lot of headwinds also in terms of how much our IRDA will reduce commission, both on endowment plans, par and non-par. So you'll have to see a bit of that. So I would wait for in terms of what are they willing to acquire. If it's in terms of acquiring physical distribution, large physical distribution, or maybe getting into insurance themselves, then we'll have to see. So I think and they already have 2,100 crores cash in the books, if I'm not wrong. So if you're raising another 3, seems to be a pretty large acquisition. So better to wait it out because if the capital asset allocation is not to the liking of the market, you may see some more reaction.
Yeah, no, absolutely. That's the other one, right? Gurmeet, the Adani pack is all, of course, sharply higher. Any thoughts? Ports, Enterprises, Power Green?
So we really don't own any Adani stock, Prashant. Actually, although I like Adani Ports, I think it's something which is their cash cows. Plus, I think it's got to do with the US deal happening. There has been some uncertainty in terms of SEC serving notices over there. So maybe the market feels that the worst in terms of the issues they are having with SEC could be behind them. So it's more, I think it's more a reaction there. But we don't own any. I think Adani Ports is something we have interest, and we genuinely believe that logistics is something with our cost of logistics as a percentage of GDP keeps coming down. What they have created is something is very difficult to replicate, and they will have a very large market share. Will continue to add market share there. So that's something we like, and maybe at some point of time, if valuations is to our liking, maybe we will get into it.
Gurmeet, I want to ask you about chemicals, right? We spoke with one of the largest and the oldest players in that space, which is Aarti, and just want to play out that soundbite. Basically, they told us that about 40% of the revenues is US exports, and within that there will be a meaningful benefit. The numbers, let's hear it from Aarti management themselves.
It's a great positive for the sector in general and also for Aarti Industries. For a country, roughly US accounts for 20% of our chemical exports globally, and in that context, $6 billion worth of chemicals get exported to US from India every year. So in that context, this reduction from 50+% to 18% will help tremendously. Even for Aarti, as part of our total revenue, 17 to 18% comes from US. So it's also a sort of huge positive for us at Aarti Industries. But I think more importantly, the certainty will help sort of decongest a lot of decision making that has got hampered in the last 9 months from investments point of view, from future growth opportunities point of view. So overall, a very welcome move and a huge positive for the sector and for the company.
Meaningful positive, Gurmeet, for a company like Aarti Industries. Do you have a view post the change, post the India-US trade deal, or any chemical company that you like?
So one, as I said, we have JG Chemicals in our portfolio, which is into zinc dioxide, with end use 80% is tire. We have Navin Fluorine in some of our non-discretionary portfolios. So that's done well, actually. That's done well despite the headwinds. We are looking at even agrochemical space. So maybe PI Industries is one of our old holdings. Maybe if we want to add, over a period of time. But as I said, I'm favorably looking at it, even Deepak Nitrite. So these are some of the names which we are evaluating, and I think that it's also at a cyclical low. And a lot of the Capex actually has happened over the last 2-3 years. So that might start coming into play as things normalize.
Okay, thanks very much, Gurmeet, for joining us. Good speaking with you. Appreciate your time here on CNBC TV 18. 670 points, 25,761, and I think it's about 40 odd minutes to go for market close. We'll take a quick commercial break here. Our Alpha Manager Sanjay Parekh of Soham Asset Managers on the other side. Stay tuned.
Welcome back. It's a very green looking screen, but let's find out who the outliers are in terms of more price action, more gains, more volumes. Hormus is here to put the spotlight on those stocks that are running against the trend today.
Green looking screen, but there are pockets of red as well in today's session, although they may just be 250, 260, but there are significant names in this list. PB Fintech is one of them. It's the third straight day of losses. Of course, the stock reacting to the CNBC TV 18 news break, which got confirmed last evening. More news breaks coming on this front as well ahead of the board meeting later in the week. The stock is down 11% now in the last 3 sessions from when it has been selling off, and today's volumes are the highest since June of 2024. So it's almost at 18-month high on the volumes, and today's session we've seen over 1 crore shares that have been traded on PB Fintech compared to a 20-day average of just around 11 lakh shares. And in light of this, the stock is now below its key moving averages. It has remained so over the last couple of months now, and because of today's fall and over the last 3 sessions, of course, PB Fintech's market cap has slipped below the mark of 70,000 crore. The other one is an earnings reaction. Varun Beverages numbers came out just a few minutes earlier. The third straight day of losses here as well, reacting to its fourth quarter results. And the last 10 out of the 12 trading sessions, the stock has ended lower. It's been underperforming over the last couple of weeks now. Today's volumes are the highest in nearly 4 months, with over 2.5 crore shares that have been traded compared to a 20-day average which is just around 40 lakh shares, and this too has slipped below its key moving averages, down around 24% from its 52-week high of close to 600 rupees. And lastly, Intellect Design, the stock continuing to sell off from last week. The third straight day of losses here as well, down 12% now in the last 3 sessions. The volumes over the last 3 sessions that you have seen are the highest since November, and today's session too has seen 13 lakh shares that have been traded, the 20-day average of just around 3 lakh shares. This stock is also below all of its key moving averages and has further slipped below its 52-week high, taking that fall from those levels down to over 35% now.
All right, Hormus, thanks very much for that. Sanjay Parekh is with us. He's founder and CIO at Soham Asset Managers. Sanjay, good afternoon. Good to have you here, and it's a good day to be speaking to you. It's always good to speak to you, but exceptionally good today with the market doing what it is. How's the portfolio doing across, Sanjay? And any fresh ideas come to mind? How to approach things with this big change which has taken place from last night?
Yeah, I mean, good afternoon, Prashant. So, I mean, luckily our portfolio was positioned quite well. Of course, we don't have a direct play for opening up, but we did. There's a very strong hope that this should get through. Maybe it was taking time, and then economy also is recovering. That is more important. So post budget, we realized that of course this future net issues will be a dampener, but in few days, and that time we didn't know that this trade deal will happen so fast. But one thing we were very positive that the economy is actually recovering, and this has been like 17, 18 months where we were wanting to happen. But now when you see on the ground cement demand, cement prices going up, steel demand, power demand, the 1 day ahead market in power, JSW Energy told us is up 35%, a month in 20 days. So that credit growth at this inflation level, inventory levels, CV demand. So it is clearly showing that economy is recovering, and that was more enthusiastic for us, So that's where our cash levels are low, and luckily market portfolio has done well because ours is a cyclical portfolio, and it's helped us.
Okay, hi Sanjay, good to see you. And as you're saying, the economy is seeing a bit of a recovery. So I had a couple of questions then. The Capex spend is as good as expected. The economy is seeing some kind of recovery as well. I wanted your view on some of these infra-related names. And the reason I ask is their order book is good. Some of the execution is quite good as well. But looking at the stock prices, it appears that they've gone through a corporate action, which is not the case. Some of the stocks are down 30, 40, 50%, and some are half from the top. I was looking at your portfolio, you'll have stocks like Dilip Bilcon and the likes. Do you think this is the space that's actually one of those ignored sectors? And if the economy is going to go up, the Capex spend is going to spike up, then maybe they're providing an entry opportunity?
Yeah, Nigel. So you have a valid point. Some of these stocks, they have moved down dramatically. And in our case, luckily our entry point was better. So it's still 5-7% lower, and of course you lost a whole year. But there's clear deep value that we see in some of them. But markets apprehension has been, and some of it is valid, that the working capital situation at times, the working capital cycle, some of the states not doing the heavy lifting of not paying on time. All these are very, very valid concerns. So the problem is not order book. The problem is getting the money back on time. And that is always been a worry with this sector, and hence they've been significantly derated. I mean, the one we are holding, in fact, the standalone business coming free to us. If I take the coal MDO value and the InvIT value, the standalone business with 900 crore EBITDA is free, and now the order inflows have started to come in. But I think the working capital situation for all of these have to get better. And for that, the support of the states in certain cases, center also, but center has been normally good in pay, is important. So I think that's where, as it gets better, I think it will be slow re-rating upwards for them.
Sanjay, did you have a word with at the dealing rooms with any of your friends in the brokerages? Have FIIs been buying today? Will they come back in a meaningful way?
So, I mean, you're not so networked, but I'll tell you broadly, I'm very, very hopeful that, and I've been into Prudential earlier meetings globally when I was in ICICI and mutual fund. So, India as a country is just one stock, where if the ROEs are higher, growth is higher, and what is the price earning or price to book. So it was not in place in the last, if you take in hindsight, growth was not coming back, price earning were higher or price to book were higher, and that adjustment was happening. Now I think, and that's where we are preempting at least that if earnings growth comes back, and if it is not one-off and it is clear U-shape, but it does sustain, then the earnings growth, and I'm saying economic growth comes back, and then the earnings growth has to follow, and the earnings upgrade cycle can come. And then world over, that's been tracked very heavy. And that's where they start buying. And valuations also now, we have very good time correction, almost 17-18 months. So valuations are also now reasonable, at least in the large cap. So I think we need to preempt a bit, and hopefully, currency also will help with, with this trade deal, and FDIs will come in. The pressure on rupee or RBI to support rupee will be easing off, and that will certainly help FIIs to further increase their allocation at a point of time.
Sanjay, what about the metals pack? How far are we from the peak? You have timed that very well. You have been patient as well on bad days. Will you take some money off the table, or are you looking to ride it for a longer run?
So we just saw, as you know, we own Vedanta.
Vedanta and JSP and Jindal Steel, I think so.
JSP, yes, we recent entry, we bought it around 2030. So all throughout our down ferrous, we were very, very positive. But after we bought JSPL the day they got the duties, the protection. Because then we said now, certainly these companies will get pricing power. And they obviously there's some price increase. And, JSPL was very reasonable. Even if we give 7 times EBITDA, we were getting a good upside from our entry point, and that's why we bought small way. So I think that cycle, ferrous, we still have to always be aware of. We have protection now. That is now not a worry, but if we did not have it, we would not have bought it. Non-ferrous, I think the SOTP of Vedanta, once the demerger happens, I still feel there could be a good unlocking. You've seen that earlier in Tata Motors, even earlier you would have seen in Raymond's, the combined piece was 1800. The one which got split, it got listed at 1800. Recently you saw Tata Motor PV and CV. So I'm very, very hopeful that, assuming reasonable assumptions, more like $60 or silver, $60 an ounce of silver, more around 3,000 for zinc, and around 2,800-2,900 for aluminum. Even with that, there's a good upside. And when the companies become very focused, there clearly can be re-rating. So we are still holding on, and we will continue to hold on.
Yeah. Sanjay, just I was looking at your portfolio. Do you still own Indus Tower, or you sold out?
No, this was again we sold off because we are making good money, and we realized actually all throughout Indus Towers, Vodafone was one issue. So whenever Vodafone led panic was there in Indus, we used to buy. And in fact, this is the third time in 3.5 years that we bought at around 328, 330, and then around a little lower than the current levels we reduced. So we love the business. It's just that now Vodafone risk is significantly less, but the growth trajectory of growth is still slow.
Yeah.
So be it the Africa expansion, the tower expansion, then the Geo reprice. Whenever Geo comes for renewal, they may not renew with Indus Tower.
Yeah.
So with that, we were a little, we thought we'd take money at the table, and we booked profits.
May make sense again at 320, 330, right? If it comes to that. But as you said, you've done this. I mean, you bought it lower and sold higher a few times now in the last couple of years. But good speaking with you. Good chat as always, Sanjay. Really appreciate it. Thank you for joining us here on CNBC TV 18. We'll take a quick commercial break here.
We'll just do a quick check actually.
Futures and options, Nigel.
Futures and options space. Let's do a quick check out there. There's definitely a short covering bounce that's taken place. Take a look at the screen. I'll pull up the futures page actually. On the Nifty, there appears there is some shedding of open interest with the Nifty up close to around 600 points. So there's about a short covering taking place out there. But the bigger short covering actually is taking place on the Nifty bank, because out there the open interest is down by close to around 10%. So massive short covering bounce is what we're seeing. Now keep in mind the India VIX had a bit of a journey towards that 16 and a half odd. That's cooled off yet again. That's telling you that you're not seeing any big risk. And on a day like this, they move inversely. Markets move up, India VIX moves down, and that's precisely what's happened. The PCR, that had moved to around 0.62, 0.65. Couple of trading sessions back as well. On budget, it went to 0.6, 0.59 as well. And the said it's stretched on the downside. Currently, it's at around 0.9. Remember, all this will change because in the next few minutes, we'll have the contract that will expire. 25,800 call. There's a mix of activity out there, so you've got the direction correct. But since the time value of money is eating into that one, the premium I think is more or less flattish at around 15. Let's get that strike up for our viewers. 25,800 and the 25,700 put. Well, the premium has eroded big time. So those writers, they're having a blast in today's trading session. What are the levels you're looking at? Well, the 50 as well as the 100 DMA. That's important. The next level of resistance really will come at the highs of today and around 25,830 or thereabouts. 50 and 100 DMA, the nearest reference point. ITC, after a while, we're seeing actually some fresh buying out there. The stock is holding strong at around 310, 308, 315. We're seeing a lot of long additions. So I'll keep an eye out on that stock. PFC as well is seeing a good amount of long addition out there. Fresh buying is what we see on that counter. And Divi's Laboratory, silently, that's actually gone in for a short covering bounce. Stock is up close to 4%. Open interest is down big time out there. So that's clearly seeing a bit of a bounce. And finally, in a strong market, you have Godrej Consumer that's actually relatively underperforming. So fresh shorts being seen on that counter. Net, there's about a short covering that's taking place. The cash market flows will be important. But I think given that it was expiry, those call writers, they got stuck on the wrong side with the markets up more than 600 points. We'll slip into a short break, but on the other side, we'll tell you some technical ideas, buying and selling trades. And also Nimish will be waiting in to tell us what is he picking up in D-Street Chatter. Welcome back. Well, the market's still holding in the green, so that's good. Now, today the event is mostly playing out, and bulk of the good news is going to be digested, but it's going to be about earnings, and earnings from here on. And Vivek joins us to give us a wrap about some companies that have actually delivered the numbers today. Vivek, take it away.
Well, that's right. Between last evening as well as today, quite a few earnings, have slipped our attention, but sharp reactions is what most of them are seeing. First on the list, a couple of hours ago, Warren Beverages came out with a set of numbers post earnings. You saw a very sharp spike, post which it has cooled off considerably. In terms of the numbers themselves, on a year-on-year basis, revenues higher by 14%, EBITDA higher by 10.5%, margins at 15.7%, and profitability jumping by 33%. However, the management commentary has mentioned that this particular quarter was impacted by unseasonal rains, and especially when you're talking about the domestic volume growth, quite healthy at 10.5%. But despite that, margins have been something that's a bit of a damper. It'll be important to see the kind of guidance that the management will give in the conference call, but the stock has seen a sharp fall. Ather Energy, very sharp up move that was seen in the stock today. Healthy set of numbers as far as Q3 is concerned. A major significant margin improvement, almost 1600 basis points improvement on a year-on-year basis. Total income is up 53%, and the management said that they saw continued market share gain as well as volume increase on the back of, and a very healthy commentary coming in from the management as well today when they joined us. Interarch, again a mid-cap company, but very sharp up move that is seen in the stock today. Revenues have almost 43% on a year-on-year basis on account of an expanded capacity base. EBITDA have a 44%, margin steady at 9.5%, and profitability up at 32%. Order book quite healthy at over 1650 crore. City Union Bank, clearly an outlier, very strong set of numbers as far as the smaller private banking names are concerned. Net interest income up almost 28%. The pre-provisioning operating profits up almost 17.5%. Profitability high by 16%. And the management got the confidence to go ahead and up the loan growth guidance from low to mid-teens to now mid to high teens. So that particular stock doing quite well. On the other hand, Utkarsh Small Finance Bank, multiple consecutive quarters of loss that this particular company has seen on a sequential basis. Losses have widened and credit cost elevated quite significantly, almost 10 to 15 basis points in this particular quarter. That stock seeing quite a bit of a decline today.
Very helpful summary, Vivek. Thank you very much for joining in. But just turning our attention to gold and silver prices because they've rebounded after the massive fall over the last week. Manisha joins in with the details.
Well, thank you so much for that. Yes, 2 days have been a massive decline that we've seen gold and silver, both of those commodities. The sell-off came in because of the margin hikes, the speculative unwinding, and also because of the easing geopolitics. So whether it has been about US and Iran or even US and India trade tariffs for that matter have led to some ease in the international markets therein. But when you look at the markets today, well, gold is trading 5% on the higher side. Silver is trading 10% on the higher side. It continues to be very, very volatile. So even as we are back at around $4,900 an ounce for gold, markets do believe that some profit taking is still remaining, and $4,400 to $4,500 an ounce is a very strong support on the lower side. For silver as well, while we have been looking at that $70 to $85 an ounce of a range in last 24 hours, a lot of experts tell me that $65 an ounce perhaps is a level that silver prices can go up to on the lower side. So volatility in the near term is something that is not ruled out. As of now, we've seen a bounce because the structural strong support numbers have kind of held on. And then there is no changes really in the long-term fundamentals. If you look at the year-end targets for gold and silver from most banks and brokerages, they believe that even higher highs is where you could be looking at by the time this year ends. The other reason that the buying has come back into the market is because the narrative about this partial US government shutdown is still on, and is the reason you wouldn't be looking at labor data. The US non-farm payroll data will also not come into this week. So some of these concerns are yet again supporting gold and silver prices. And then of course the kind of sell-off that we saw in the last 2 days, this is a bit of a bounce back that we're looking at in the day.
Okay, all right. Thanks a lot for that, Manisha. Well, let's hop across to Mitesh. He's here to give us a couple of trading ideas. Mitesh, what do you have on your radar?
So I think, after the opening idle, we did have some kind of a decline, but since the afternoon time, we have held on well. So I'll go with some long calls, hoping that the momentum will spill over in the next couple of days. So DMart is a BTST with a stop at 37.59. Look for targets of around 3,800, and Apollo Hospital after correction is trying to reverse. So that's the BTST with the stop at 70.75 for targets of 71.20.
Okay, all right, Mitesh, thanks very much for that. So those are individual trades. Markets, of course, holding rupees at the day's highest point, 90.22. Well, it's a CNBC TV news break confirmed. We reported that Advent International is set to pump in 2750 crores odd into Aditya Birla Housing. That's essentially the fully owned subsidiary of Aditya Birla Capital, which is a listed entity. Rachna broke that story and now she has got more details. Rachna, congratulations, and take us through the transaction.
Right, it is a CNBC TV 18 news break confirmed, and with this deal, Advent will hold about 14% in AB Housing Finance by investing about 2,750 crore rupees. Now, what's important here to understand is that this deal marks one of the largest capital infusions in India's housing finance sector in recent years. The investment will be made through India Limited, which is an Advent entity, and the deal is structured as a primary capital infusion. Completion of the deal is, of course, subject to shareholder approval, regulatory clearances, and other customary conditions. Now, why this deal matters? The 2,750 crore rupee check significantly strengthens Aditya Birla Housing Finance's capital adequacy and balance sheet, providing firepower to scale its loan book at a time when housing financiers are preparing for the next phase of credit growth. Now, the capital is expected to support expansion in affordable and mid-income housing segments. These are the segments that continue to see resilient demand driven by urbanization, infrastructure-led development, and policy support. Now, housing finance companies are also under increasing focus from regulators and rating agencies to maintain stronger capital buffers and diversify liabilities. In this scenario, a large long-term private equity infusion not only supports growth but also enhances confidence amongst debt investors and bond markets. So the deal comes amid a broader revival of investor interest in India's housing finance space over the past 12 to 24 months. We've seen the likes of Shriram Housing Finance's deal with Warburg Pincus or Aavas and CVC. So a lot of private equity action in the sector. So against this backdrop, Advent's 2,750 crore rupee investment stands out as one of the biggest primary equity infusions into a housing finance company, second only to outright acquisition deals like the Shriram Housing Finance one that I mentioned. Now, this transaction also marks Advent's second stint with the Aditya Birla Group. The global PE firm was previously an investor at the parent level, that was in the Aditya Birla Capital, and has since monetized parts of that exposure. Its return this time at the subsidiary level signals definitely a renewed conviction in the housing finance business specifically, rather than a broad holding company bet that we've seen. So we will keep an eye out for more.
Okay, well, lots of transactions there, and we'll get you more over the next many days and weeks. Rachna, thank you very much for that. I think markets, of course, holding on 645 odd points in the green, and you know, some of the stuff which, of course, started one way is continuing to look at lots of these, you know, specifically affected in a positive way companies, right? In the textile, the shrimp, Avanti feed, and so on and so forth, all have not opened up from their respective circuits. Jay Bala is with us with what he'd want you to do as we look ahead. Jay, what's the sense? I mean, 7:30. You know, right after the budget on Sunday when we were trading, it looked like perhaps there was that a touch of the August low, 24, was it 330, 340, right? Perhaps coming, but dramatic swing since then.
Hi, Prashant. It's not a surprise for us. We've been pointing out for the last 6 weeks here on CNBC TV 18, the markets are likely to hit to the August low of 24,400 and then recover from there for a resurgence to 29,000 on the Nifty. So the market's gap up today is not a surprise at all from Elliott wave perspective. But the low of 24,713, which was 24,571, which is very close to 24,400, might have got a truncated move. So I think the next leg of the move for 28,000 might have already begun. I just want to, I don't come to a conclusion on emotional markets, and such huge gap ups are classic emotional markets. I'll allow for the markets to settle down for one more day and let the follow through come through. But in all probability, the markets have started its move to 29,000. I'm just a little bit, want to see the markets have a follow through. So it's quite bullish from here.
Quite bullish from here, all right, Jay. But earlier, I think you were thinking that we'll dip and then we'll move up 24,000, and then the journey comes up. It seems we've skipped that step. You're ruling out that we go ahead and visit the recent low, or do you think now let's get fasten our seatbelts and get ready for a ride in the northward direction?
That's right, Nigel. You should always be flexible about your views on the markets. As far as technicians are concerned, market is the god, and whatever it says, you just nod to it. And the low that it registered on the budget day, the spike low, which was very close to the 24,400 low, has a very good chance of being a significant low that doesn't get visited for the next 6 to 12 months. So watch out for it. We are looking for, like I said earlier, I want the market to stabilize for a day or two, and then we can, thump our desk and say, yes, that's the bottom. But, in all likelihood, the pointers are towards the possibility that the markets have already bottomed and fresh record highs are coming. And, Stranger Things is no longer going to be things that you're going to see on Netflix or Amazon Prime. It's probably coming to the market. You're going to have disparate moves in the markets, and yet markets, misbehave for a lot of people. So, but it's all bullish from here on. I reiterate the bullish stand.
So you said straight to 29,000 without too much hesitation and pullbacks, etc., or it's a long drawn journey?
There'll be pullbacks, Prashant, but it will be a sequence of higher highs and higher lows. But the budget low, that we saw on Sunday, there's a reasonable probability that it's going to hold. I'm reiterating the same point. I just want the market stabilized and have a follow through in the next couple of sessions.
So so you go long Nifty and trail Nifty stops here, or is it better to do through stocks?
Yeah, it can get to the stock level, the micro level, but you have to be cautious on, or at least in my opinion, I'll be cautious on two sectors. One is the metal space, another one is the FMCG space. FMCG have not been bullish since the September 2024 peak, and but there could be pockets where there could be outperformance. Metals, they've been the first to clock fresh record highs, and they could see considerable amount of pullback. I'm seeing a significant reversal possibility for copper on Comex, and even gold and silver. They might have peaked for the medium term. You could see increased sharp levels of decline, but the long term is still bullish. But in the short to medium term, you're going to see very likely to see very sharp pullback for gold and silver and platinum.
Do you have a level on gold and silver? Because in the past, when there has been a drawdown, we've seen falls of 30, 40, 50%. What could be the extent if there is a correction in gold and silver?
See what you saw on last Friday, Rima. It's just the beginning, and we could see something like 3,400 to 3,100 on Comex gold, and something like 62 to 58 on Comex silver. Like I pointed out last time, on trading it requires a considerable amount of knack and considerable amount of skill. So it's not for everybody. But my opinion is that silver is going to see a bounce somewhere close to 91 to 93, and then resume the decline it saw on Friday. Same thing for gold. Gold probably going to go somewhere closer to 5,100, and then resume the decline that it saw on Friday.
Okay, Jay, stay on. We'll slip into a break. Before that, here is what market veterans have to say on the deal announcement impact on the markets. Sunil Singhania and Nilkant Mishra.
I think the markets was lacking a catalyst, and this certainly comes as a catalyst. In fact, I jokingly say that people had just stopped even talking about stocks. It was all about gold, silver, and I have never seen phones not ringing after a budget the way this time it was quiet, because no one was just interested in knowing what to buy. So I think this comes as a very, very pleasant surprise. It helps I would say the mood, which was the most important. It definitely helps the economy, the corporate profit growth, and hopefully the currency should also respond. So I think all in all, the positioning is light. FIs have been short, has been seen by the futures, open interest. Position on the domestic side, at least on the speculative side, is low, and expectations after the budget fall were also very, very low. So this definitely comes as a big catalyst.
As you know, there are many sectors which are exempt from IEEPA tariffs, electronics, pharma, petrochemicals, etc. So those have been growing very well anyway without this deal. The commodity exports, like say shrimp, they were anyway there was trade diversion, meaning that if the US market was shut, they started selling to China and Japan and Europe. There were sectors where I think there was some transshipment also starting to happen. And by and large, the tech side FDI had also been happening. So even before the new ambassador announced that India was going to be part of Pax Silica, the investments from the US hardware tech names from India were actually quite robust. But that does not mean that the deal has no value. There were sectors like gems and jewelry, apparel, auto components, where there was very visible impact of the 50% tariffs.
Okay, just 2 minutes to go before we wrap the trade. Still in conversation with Jay. Jay, any more trading ideas that we can take just for the near term?
Yeah, I don't have anything for the near term. I have something for the slightly longer term. The one is RT Industries, and it's made an important low at 330 ounce. And today's move is a reiteration of the fact that it's heading to huge levels from here. I'm anticipating it to be a 2.5, 3 bagger from current levels. The stop loss is 360. And we had had a call on Bharat Forge in September, October. So I'm reiterating a call on that. It's heading for fresh record highs past 1800.
Okay, all right, Jay, thanks a lot for joining in and giving us all of those details. But let's wind down trade, and what a terrific Tuesday it's been for the markets. The total market capitalization that the BSE listed companies have put on today, I've not got this number wrong, it's 12.5 lakh crores in a single trading session. We had bombastic gains actually. If you pull up the Nifty, look at that, 2.5%. When is the last time we've seen the markets move to that sort of a level? And this is the important one, the advancing number of stocks, 2,500. Brilliant. Your portfolio must be feeling very, very good. Let's run you through a few big names then that moved today. Gokuldas, Welspun Living, they are direct beneficiaries of the tariffs coming down, so all those stocks did pretty well. Indocount as well was locked up. You couldn't buy these stocks after a while because there were pending buy orders out there. Other stocks that have exposure to the United States, Apar Industries, Avalon Tech and ADF Foods. All three of them come up for you on the screen. Again, circuit stocks. So quite a few of them moved up today. And the other stocks that have export exposure, whether it's Goldium, whether it's GNA Axles as well as Carousel. Remember, all of them have a fair bit of exposure to the United States, and that's why those stocks as well did pretty well. We should get some of them up for you. Goldium, GNA Axles and Carousel. A few trading sessions ago, everyone was worried about STT, right? Today, everyone was only talking about TT. Terrific Tuesday is what we saw. Everyone forgot about STT. And BSE, that's the barometer of the market pulse actually today. After correcting 10% in a single trading session, the stock today ended at a level prior to what we saw on budget day. So brilliant move, brilliant bounce back is what we saw on BSE. From the big boys that did well, Reliance Industries, that came in there, that did bulk of the heavy lifting. With the weightage that it has on the index, it's as good as an index by itself. So that one did well. And because Geo Financial Services as well has a large chunk in Reliance Industries, that was up close to around 8%. Result reactions, earnings is going to drive markets from here, right? MobiWick, the markets seem to have liked what they reported. Adani Ports, you had an upgrade in terms of their guidance to the street like that. And the Adani Group stocks itself, they had a bit of a relief rally. Whether you're looking at Adani Power, Adani Enterprises, those stocks did pretty well. Solar plays, they got smashed out of shape, but they said, let's bounce back, let's participate in this party. So we had Ather Energies that was up, Premier Explosives as well, did pretty well in today's trading session. There were a few stocks though that were under pressure. Far and few though, but we did have a few stocks that ended lower. So you had PB Fintech that was down, you had Misho that was down in reaction to its numbers, and Aegis Vopak as well that was under pressure in today's trading session. But you only had around 450 stocks that were declining in today's trading session. But that's the one that you'll clutch onto and you'll say, the bulls, they fought back. A terrific Tuesday is what we saw. BSE market capitalization, 12.5 lakh crore in a single trading session. You're feeling good, right? The rupee showed some strength. The equity markets end up. The deal that was signed overnight, or that was the truce that was announced overnight, that definitely made the bulls feel good. And at least for now, sentiment is positive. We'll have to wait by for earnings and see what the RBI does later this week. But for the time being, a good close to the trading session. And it's been a long while since we saw that. From budget rate lows, the markets ended up close to around 1,100 points.
Well, it is indeed a terrific Tuesday. It's the kind of session where the bulls wish that it hadn't ended at 3:30 and trade had continued. Well, it brings us to a close in this edition of Closing Bell. Thank you very much for watching. Don't go anywhere. We'll prep you up for tomorrow with Markets Forward.
The last